Just getting started. This is James from Dividend Stock Talk. Today is 6/9/2024. What does that mean? That means we officially into week number 11 of the second quarter, which means we only have a couple more weeks until the half of the year is done and over with. Foosball, how you doing today? Lifestyle, Lily, how you doing, Lily? Alsborough, Albus Blood. Interesting. Danielle, how you doing? Thank you, Danielle. John, how you doing also? Stop recording that, and let's go here, let's go there, and let's get the ball riding. New York Boutiques, you're here today. Well, pleasure to be here there. Hey, Fred, how's it going? All right, so we're going to get ready to get started. James, we are friends now. Steve, hey, Steve from Cleveland. Sorry, dude. It's a household joke. Hey, Mike's over here on YouTube. All right, Mike's over there on YouTube. Yeah, it's a running joke at our house. Anyone named Steve, they're from Cleveland automatically. I don't know. The kids came up with that weird saying. Seems like everybody we knew came from Cleveland, named Steve. All right, so let's just jump in, get started, see what we're doing. First of all, let's go over some of the disclaimers. No, Steve's that's your brother. That's funny. Okay, so we're going over some of the disclaimers. Disclaimer number one: I'm not a financial planner. I'm not a financial investor. I'm basically nothing, nobody, no how, nowhere, no way. Okay, I'm nothing. I'm just a regular, normal guy who did that 9 to 5, 40-hour week thing. Now I'm retired, and now I want to share what I know with you people. What is that? Well, that's how to invest in the stock market, in dividend stocks specifically, for a safe, predictable, secure 1% per week. Well, how do I do that? Well, I only look at companies that share profits. That's a dividend. A dividend is our share of the profits. Once we become buyers and sellers in the stock market, any stock you buy, it doesn't matter. If you invest money, you become a shareholder. You own a portion of the company. Okay? Do I use TPO? I even have no idea who TPO is. Yo, dumb goat. Yo, dumb guy. That's an interesting name. Okay, so I only want to look at companies that share their dividends, share their profits, because you only have two types of companies. There's 9,526 companies. We checked this week. We actually, literally, we checked to see how many companies were available to invest with in the stock market. Well, 9,526. Okay, so out of all of those, there's only a very small percentage that actually share their profits. Only about 4,000 or so. Time, price, opportunity, the point of control, and value, high or low. That's a question. Well, I'm a little bit lost with that question. Seriously, I am. I like simple questions, direct and right to the point. Time, price, opportunity, the point of control, and value, high or low. No idea what that means. Reed, do you see what I said, sir? No, Reed, I didn't see what you said. Sorry. Let me go back and see what Reed had to say. Okay. SPX. All right, sorry. Vastness. I don't do the SPX. All right, sorry, I didn't see the question. You have to shoot me that question again. Doc, how you doing? All right. Reed Farmer. I didn't see the question, dude. Sorry. What is a dividend? Oh, how do they work? Oh, okay, well, Peyton. Is it Eddie? Or is it Peyton? Oh, Peyton Eddie. Basically, a dividend is your share of the company's profits. I mean, you hear it all the time. You know, company's profitable, company's not profitable. Okay? Earnings per share. It's like, if a company makes money, I mean, that's the reason to get into business in the first place, to make money. And once your company gets bigger and bigger and bigger, and it gets to a certain point, we need to bring in outside investors. Well, what are you going to give the outside investors? Okay, you can only grow your company by yourself a certain amount, but to get bigger and bigger and bigger, Boz, you want to look at Abbott Labs? ABT? We'll take a look at Abbott Labs. But if you want your company to get bigger and bigger and bigger, you have to take in outside investors. What are you going to, how are you going to incentivize the investors? Well, you have two choices. You can share profits through a dividend, or you can just take those profits, put them back into the company for capital appreciation. The stock goes up faster, quicker. Okay? But it's your choice as a business owner. When you get to a certain point, okay, you start sharing your profits with your investors. So once we buy and sell stocks, we become the investors. We're the people that make this happen. You know, the high, the low, the open, the close, all that stuff. We, the buyers and sellers, do that. Are you able to find a lot of these? Yes, over 300. That was my question above. No name. Okay, got it. What is your take on options? Daniel, I love options. Just hang tight. You're new here. You'll see how I incorporate options to get that safe, predictable, consistent 1% per week. Volume profile is the name of it, sir. Volume profile? All right, dumb goat. Really don't understand what that statement is. Volume profile is the name of it, sir. All right. Anyway, let's get back to my story. Okay, so for companies to share profits, they got to be profitable. And usually, hey Kevin, how you doing? Usually when companies are profitable for a long period of time, they get to know what they're doing. So they say, do you have a group I may join? Daniel, yes, I do. We have a morning group. We trade every morning, Monday, Tuesday, Wednesday, Thursday. Okay? Monday, Tuesday, Wednesday, Thursday, we actually do our trading. Friday, we jump in at 3 o'clock because the market gets to close. Now, we like to sell weekly options. Now, those who ask me about options, I've been messaging one of them claiming they are you and holding a spot for me $1,000. All right, Reed Farmer, yeah. Okay, if you are going to send money to me, you need to call me first. Okay, I don't take money from anybody. I don't ask anybody for any money. So if there's 22 people pretending to be me, last I know. Okay, because we did a search. How many dividend stock talks are there out there? There's 23. One of them is me. Okay, I tell you, if you want to talk to me, if you have questions, send me your phone number. I will call you. If you don't believe me, you can ask some people in the chat. They have been here since I started this thing back in January. When I say I call, I do call. Yep, they are acting like you with your picture. Yes, but I'm telling you right here, as you see the words coming out of my mouth, okay, if you want to talk to me, call me or send me your number and I will call you. I can almost guarantee those other guys won't say to call me. All right. The value are high and low is part of the volume profile. I'm sorry for making the question confusing. Okay, but still, dumb goat. The value area high and low, part of the volume profile. I'm sorry for making the question confusing. It's not really a question. It's more of a statement. Okay, because you're stating that the value area, high and low, is part of the volume profile. That's not a question. That's a statement. Okay, but what does it have to do with what we're doing here? What we're doing here is we're looking at some good quality companies to buy and invest in. Now, I like companies that have 20 years of increased dividends. Why? Well, because it shows longevity. It shows predictability. It shows stability. It shows profitability. If they have been increasing their dividends, not just paying dividends, but increasing consistently. Because we do look at companies. We do look at companies that have continuously paid dividends. There's a difference between continuously paying dividend, because the dividend can be going down and they're continuing paying it. But if they're continually increasing, that means they're getting more profitable year after year after year after year. And that's what I'm looking for personally. I'm looking for a company that's continuously profitable and continuously sharing their profits. So there's only about 300 of them that fit my criteria. 20 years of 20 years of increased dividends and weekly options. Well, why do I want weekly options? Well, because dividend stock can only give me a dividend once every 90 days. So, hey, Bobby, how are you doing? Bobby's here. All right. A dividend stock can only give you a profit every 90 days by a dividend. So, if I was going to buy Nike, NKE, Nike would give me a dividend every 90 days. Okay, fine. But that's not good enough for me. For me, I want weekly cash flow. All right, so I want to take a look at Nike because I like Nike. I know what they do. All right? I know who they are. I know what they do. They increased their dividends. Great. All that works for me. All right. So what do I want to know specifically? I want to know what can I buy it for first thing in the morning. Because here's the numbers. The last trade is the last trade on Friday. Friday afternoon's last trade's right here. Okay? The last trade for last week or yesterday. The bid, what I can sell it for if I already own it, what I can buy it for if I want to buy it. Okay? The volume, the open, the high, and the low. There's nothing this weekend, so it's all got set to zero. Alright? So, other than that, if I'm buying it for 96, 98, great. If I'm going to do a covered call, now if you don't know what a covered call is, that means you buy some stocks and you sell somebody the rights, not the obligation, the right to buy it from you for basically the exact same price they paid for it. So if I'm paying 96.97, 96.98, this is what I'm paying for it first thing tomorrow morning. I want to sell somebody the right to buy it from me for almost the exact same price. To do that, I do a covered call, and the closest strike price is the 97. So if I buy it for 96, 98, and I sell it for 97, I'm only making 2 cents per share. Is that right? No, that's not right. What I am collecting is $1.09 per share, because the call option is kind of like an insurance policy. Whoever is paying that, who's ever paying me the money to buy that from me, okay, they're betting that stock might go up. Good, fine, that's perfectly acceptable if that's what they think. I personally don't care. Okay, I want to know, does the company consistently increase their dividends? When are they paying their dividends? Because I want to buy it just before they pay out their dividends, so I have an opportunity to collect a premium and the dividend. But here's the thing. I like to buy it 2 weeks before the dividend. Let me explain. Okay? Here's a dividend calendar. Okay? I like Thinkorswim. This is a trading platform that I use. Now, you can download Thinkorswim for free. I don't make any money off of it. I have just been using it for over 15 years. I like everything they have. Everything they have for what I want to do is available at the click of a mouse. This is a dividend calendar, June 2024. It tells me when the stocks on my personal list. Now, there's over 9,526 companies available, but I only look at less than 300. Why? Because only 300 have consistently increased their dividends and have weekly options. That's important to me. That's what I want. Safe, predictable, consistent, 1% per week. How can I do that? Well, first of all, I look at the calendar. Okay, tomorrow is the 10th. These are all the companies that have their EX date this coming week. So I could, hypothetically, buy any one of these before the EX date. Anything except for OXY, because OXY is tomorrow, unless I buy it first thing in the morning. Okay, so to qualify for a dividend, I have to buy it before the EX date. That's just to get the dividend. But that's not what I want to do. Okay, stocks have a tendency to go up before the dividend date, and they usually go down after the dividend is paid. Okay, so why would I want to buy it when the dividend goes, when the price goes down? I want to buy it before then. Okay, so I want to look 2 weeks out. So I want to look at this week right here. Okay, these right here. Now I'm only picking up like two new stocks next week. So I have these 6 to look at. I have a couple more here. Those are the same 2. Okay, I'm just going through the different lists that I have. Yeah, that's quite a bit to look at. But the reason why I look at the calendar first, I look at the calendar first to find out when are they paying their dividend. Great, I want to get 2 weeks before then. Why? Because the stock has a tendency to move up just before the dividend. And okay, hypothetically speaking, let's take a look at John Deere. Okay, John Deere. I think you all know who John Deere is. They make the green tractors with the yellow trim. Okay, everyone knows what John Deere is. So John Deere has it on the 28th. They're paying a dividend, $1.47. Okay, so if I buy it first thing tomorrow morning, all right, I can collect a premium. Great. Well, what's the premium for John Deere tomorrow? Okay, trade DE John Deere. Okay, so hypothetically speaking, tomorrow morning I can buy John Deere at $368.58 per share. All right, so the 367s are going for $465. The 370s going for $335. Both of them are giving me roughly over between 1% and a little over 1%. Great. So if I am buying it here, selling this, collecting $460 a share. Tomorrow's Monday. Okay, so if I'm buying it first thing tomorrow morning, collecting $465 a share, if it hits my target by Friday, great. I'm back into cash come the 17th. Okay, fine. Now, if it doesn't hit my target on Friday, well, I collected a premium, $460. Okay, I get to do the exact same thing again this week. Okay, so I collect another premium for this week. What happens if it doesn't hit my target? Well, I'm back into cash again. And I still, well, if it hits my target, I'm back into cash on Monday. But if it doesn't hit my target, I've collected 2 premiums. Now I'm here on the 24th, another premium and the dividend. Premium, 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 dividend. Okay, the first premium is $460. See that price right there? $465. Okay, I'll lose $1. So I'm still making over $3, which is still over 1%. So I'm getting my 3 and change first thing tomorrow. If it doesn't hit my target by Friday, I get to do it again in the week of the 21st. If it doesn't hit then, I get to do it again on the week of the 28th. And the 28th is a dividend. So it's premium, 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 dividend. That's why I like to get 2 weeks before the dividend. Now, if it hits my target on the first week, great, fine. I'll see you again in 90 days. Why? John Deere pays a dividend every 90 days. Okay, so it just so happens that the dividend for John Deere is on the 28th. And I like to get 2 weeks ahead of time. So, 1 week, 2 weeks. Tomorrow's Monday. So I want to take a look at John Deere to see if it's a good opportunity to buy John Deere. Now, just because the numbers look okay, right here, what can I buy it for, what can I sell it for, what am I bringing in on a weekly basis, fine, that looks good. But that's only half the picture. The other half of the picture is the chart. The chart tells me if it's the right time to buy. Well, what does that mean? Well, first thing I want to look at is where's the high, where's the low, where was it a year ago, where is it now? And is there some kind of path to where it's going next? Well, and this one is not really a path to where it's going next. She was here a year ago, she's here now. That's almost like channeling going sideways. I hate saying sideways because stocks don't go sideways, they go up, they go down. That's all they do. Okay, so let's check out the numbers because this is the 1 year chart. A year ago we were at 380. Okay, she topped out at 450. Okay, that was back at the end of July of last year, and then towards the end of February of last year, February of this year, the low of the year was 368.50. All right, well, what's the last 90 days look like? Okay, here's the last 90 days. First thing I want to see, where's the high, where's the low, where was it, and where is it now? Okay, it looks interesting. I want to take a look a little bit deeper. Okay, 90 days ago, 374. The top was the 15th of May, which is a couple of weeks ago. Okay, and the bottom was last week on the 29th. So here's the 29th. Here's your high, here's your low. This is what you need to concentrate on because that gives you an idea of where it's going next. Where it's going next, that's what I want to know. All right, the last 30 days. The last 30 days gives you a better idea. Check this out. 30 days ago today, we opened up at 403.66. Okay, a week later, you're at your high, and then she drops. That's 2 weeks ago. Then she's up, and now she's channeling this way between 365 and 375. Just kind of going in a channel. I hate saying sideways because they don't go sideways. They go up, they go down. Okay, up, pull back, up, pull back. Okay, I would like to see it break out to the top side, but it's not breaking out to the top side yet, so I really don't know what the direction for John Deere is for tomorrow. Okay, let's take a look at some of the questions. I've been pausing the questions for a little bit. Alright. Well, I'm still waiting for my profits from Brooklyn Bridge purchase. Yeah, that's in the mail, Al. Okay, I told you I'd get that out to all the investors in the mail. You should be getting it hopefully sometime this week. Alright, read. I said I wanted to learn from you, and they said they would teach me for money. I almost did. Well, sorry to hear that, dude. But, you know, if I take money from someone, I do it face to face, eye to eye, handshake type deal. I'm old school, okay? Okay, you want to communicate with me? Give me a phone number. I will call you. I will talk with you and see if it is right. This might not even be right for you. This is slow, predictable, monotonous, and boring as hell. It's only 1% per week. Granted, 1% per week is over 50% per year. It takes less than 10 minutes a day. That's why it's called Dividend Stock Talk, brought to you by the 10-Minute Trader. Simple, safe, predictable, consistent 1% per week. That's all I'm looking for. All right? How do you join the group? Daniel. All right. Daniel, up here in the top left corner, you'll see my pretty little face up there. Yeah, you tap on that. It says Dividend Stock Talk. That will bring you to my my bio. Is that right? All the information about me, who I am, what I do, that kind of stuff. Fine. Once you get there, you're going to get to a website, a link to a website. There it is. Link to the website. Okay. Now, for those of you who don't know, this screen behind me. Okay, this screen behind me. This is live on YouTube. Okay, The 10-Minute Trader on YouTube. It's live so you can see it on your big screen TV or on your computer. If you're trying to look at it on a phone or an iPad, you're not going to be able to see these small numbers. Seriously, you're not. Okay, that's why I broadcast this live on YouTube, for you to be able to see the numbers. So when I'm telling you the dividend is $1.23 or the date is, January 6th, you can actually see the numbers. All right, so back to you, Daniel. Once you get to that10minutetrade.com, okay, dividend stock investing up to 50% returns annually, blah, blah, blah. If you're looking to strike it rich overnight, this ain't it. Seriously, if you're not okay with 1% per week, slow, I'm talking slow, predictable, consistent 1% per week. It's boring in hell. It's supposed to be boring. At my point in life, I'm retired. I don't want to have to go to work 40 hours a week and work for some snot-nosed kid that's barely out of college. No, I don't want to do that. All right? I have a little bit of money set aside that I worked 40 years of my life to get. So I use that money and I live off of the interest. Okay, so if you want to join me, here it is right here. Live trading online. Okay, you click on that, that will take you to my Patreon, the10minutetrader.com. Wait a minute, Dividend Stock Talk, sorry. Dividend Stock Talk, this picture of me again. Okay, where was I? Oh, back here. Okay, so underneath that, you'll see the social media. YouTube, Twitter, Facebook, Instagram, podcasts. I have a podcast that I've been doing for over 4 years. There's over 900 episodes. Every single trading day, I do a podcast just before I do my trade. I actually trade in the podcast. I say, hey, this is Jan from Dividend Stock Talk. Let's make some trades today. And I go through all the numbers. Okay, granted, it's audio. Now, I'm just learning how to do the podcast in a video format. So for those who want the podcast in a video format or an audio format, that will be available shortly. But anyway, back to what I was saying. Underneath that, you're going to see current trades for the year. I share 2 accounts with you guys. Account number 1, account number 2. Now, why do I share 2 accounts? Well, basically the exact same trading strategy, but one is all cash. Okay, now most of you, I suggest, use all cash. Account number 2 is margin. Margin is borrowed money. So I'm borrowing money from someone and I'm trading someone else's money, and I am paying him or her or whoever an interest rate every year. So I'm paying to borrow that money. Granted, look at the return so far. Account number one, 28.5%. We're not even halfway through the year yet. We got 3 more weeks halfway. 1% a week, we would actually be, we're in week number 21 at the moment. I think, wait a minute, 21. We're in week number 23. Okay, so we have 26 weeks. 26 weeks halfway through the year. We have 3 more weeks before the year is done. At this moment in time, I'm at 28.5. I am more than past 1% per week. Okay, great. But look at account number 2. 69.5. Now that's borrowed money. That's 100,000 cash, 100,000 margin. So it's borrowed money. It's 50-50. Half mine, half the broker's of money. Okay, but I'm borrowing that money and I'm paying interest on that. This one over here, I started out with 117,000. Okay, that was at the beginning of the year. So far, as of this date, I've made 28%. I've taken out 22,800 so far. Okay, because like I said, I do live off the interest of my money. Okay, that being said, there's all the trades for this year. So if you get a chance and you want to find out, do a little bit of recon. Okay, week number 9, Hewlett Packard, Macy's, Best Buy, Walgreens, 3M. Come on, you've heard of every single one of those companies. Week 10, Macy's, 3M, Alcoa, Nordstrom's, and Walgreens. Okay, week 11, Comcast, Walgreens, Kohl's, and Nordstrom's. Holy cow, I got 11% in week 11. That's crazy. All right, let's get back to the trading. Okay. So Daniel, that's how you join the group. You go up here to the to my bio, okay, .10minutetrader.com. Go there, follow the links to the podcast, not the podcast, to Patreon or the live trading. I meant, do you use volume profile? I'm sorry for being so confusing. Okay, dumb goat. I don't use volume profile. What I use, my main focus is, when are they paying their dividend? That's my main focus, because stocks move up just before the dividend is paid. So if I'm looking at STX and it has its dividend on the 20th, I want to buy it 2 weeks before that. I want to buy it on the 3rd. Okay? American Express, it has its dividend July 5th. Is that right? Yeah, July 5th. Okay? I want to buy it on the 17th, which is next week. If the numbers work. That's the first thing I want to look at. I want to look at the calendar first. The numbers second. What can I buy for? What can I sell for? What's my return? Okay? Then I want to look at the chart. Is the chart telling me it's a good time to buy? It's very simple. Okay? I don't want to buy at a high, because you can only have one high and you can only have one low. Okay, so when it's at a high, she has tendency to drop. Now, is that dropping in price? Okay, so if I'm at 415, is the price going down, or is that investor saying, hey, I'm going to take my profits while they're here? Because it's not a profit until you take it. So if you buy low, okay, and then you sell high, the stock drops down to a low again. And once it starts at the low, it turns around and starts going back up again. That's all stocks do. Take a closer look again. Okay? This is John Deere for the year. You take a look at the numbers. Okay, back here, back last June, she went up, pulled back, up, pulled back, up, pulled back. Whoops, yeah, pulled back. Up, down, up, down, up, down, up, down, up, down, up, down. That's all they do. The idea is, don't buy at the high. Buy it at your low, get a predetermined profit that you want to take, get the hell out and move on to the next one. Why? Well, take a look. I have over almost 300 companies. 300 companies that do the exact same thing. What is that? Well, they have over 20 years of increased dividends. Why is that important for me? Well, because when, not if, when the stock comes down, I am at least guaranteed to get higher dividends every single year. Because if a company has paid dividend for 20 consecutive years, they've got to be at least 25, 30 years old, which means They have some historical performance. They have some market value. They have stick-to-ability, history. They've proven themselves. They're consistently increasing their dividends. So what does that mean? It means they're usually going to increase their dividends again. Well, where do you find that list? Well, you find it from the Dividend Kings. Those are companies that have increased their dividends for more than 5 decades. The Dividend Aristocrats. There's a bunch of companies that have increased for 25 consecutive years, year after year. Not once in a while, every single year. 2014, 2015, 2016, but 25 years. Higher and higher and higher and higher dividends. Now, if they stop paying higher dividends, guess what? They get tossed off the list. Now, can you imagine a company that has 3M? 3M recently reduced their dividends after 65 years of continuous increasing. Can you imagine? How would you feel as the CEO? Thinking to yourself, this company has increased its dividends to its shareholders for 65 years consecutively. Now I have to cut the dividends. Well, how do you think the investors felt about that? 3M is no longer a dividend king. They got to start back at ground zero and go one year after another. It's going to be another 50 years before 3M gets back up onto the Dividend Kings list. They've been in business for 100 years, so it's a good chance that they're not going anywhere. But it is what it is. All right, so let's take some more of these questions. Alrighty. P. Everly back again. Dividend Stock Talk just joined you live. That's funny. Did he really? I'm looking. I don't see him up here. That's funny because the guy has got, it's funny. Out last night, we're doing a show last night, and all of a sudden, the guy who pretending to be me, pretending to be Dividend Stock Talk, he joins the live. And he has the balls to say hi to me. It's like, really? You got some set of balls, dude. I don't know who you are. But, hey, more power to you. You're getting the information out. Okay, fine. More people are taking their own money into their own hands. However, I'm a little unhappy when you say you're me and you're telling people to invest in cryptocurrency. I don't do cryptocurrency. Sorry. Not until the wild, wild west is done and over with cryptocurrency. I can't use cryptocurrency to go to Starbucks and get a cup of coffee. I can't get gasoline with cryptocurrency. I can't pay my electric bill with cryptocurrency. So at this moment in time, it's just a fad until it is accepted worldwide. And it's not accepted yet. So until then, I'm waiting. Alrighty. I said I wanted to learn, blah, blah, blah. Okay. How I joined the group. I already told you that one, Daniel. Okay, more questions. P. Everly, yep, I got that. Are dividend stocks better than growth stocks? Let's see if I can read that name. Mr. Salchipapa? Mr. Salchipapa. Okay. Now, it all depends. I'm going to be honest with you. It all depends on what your goals are. I'm 60 years old. I have no desire whatsoever for a growth stock. A growth stock means I take a big chunk of my money, put it aside, in hope that it goes up. Yeah, I don't play that game. Sorry. If I was younger, my 20s, 30s, maybe 40s, yeah, I'd do it. Maybe 50s, I'm not sure. But no, I'm 60. I'm retired. I have a certain amount of money, and I want to protect it. I want to make sure it is safe, and I want to make sure my profits are consistent and predictable. Okay, this trading strategy is really not that difficult. There's only about 300 companies that actually fit the criteria that I'm looking for. All right, so hopefully that answers your question. So there is no such thing as is dividend stocks better than growth stocks. Okay, for this particular trading strategy, safe, predictable, consistent, 1% per week, yeah, dividend stocks are better because they have consistency and they have predictability. What do I mean by that? Well, how do you know when a stock's going to move up? There's only two reasons a stock moves, a known reason or an unknown reason. Well, what's the difference between a known reason and an unknown reason? Well, death of a salesman, death of an important employee. Remember the Exxon Valdez when it hit the Puget Sound, it spilled all that oil? Or when British Petroleum sprung a leak in the Gulf of Mexico? or when you had a train derailment, stuff that you cannot predict. It just happens. You can only react to it. Those are unknown reasons. You can't predict an unknown reason. But what can you predict? Okay, you can predict earnings, dividends, stock splits, corporate announcements. Those things can be planned for because they plan them out. How's the stock going to react to an earnings report? How's the stock going to react to a dividend play? How's the stock going to react to seasonality? What do I mean by seasonality? Well, why does Weight Watchers go up the first week of January? Why does Hershey go up in the first week of February? Why do oil stocks go up in June and July? Or gas stocks, I should say. Oil stocks go up in March. Certain stocks move a certain time every single year. Winter, spring, summer, fall. Who's going to be buying heating oil in June and July? Nobody. People are going to be buying heating oil in February and March. Why February and March? Well, because you can buy heating oil any time of the year. You can buy it any time of the year. But who puts their heater on in June, July, August, September, October? Nobody. People put their heating systems on, heating oil, you turn them on in November and December. So when January, February, March comes along, their tanks are getting halfway empty. So they all got a call at the same time. Okay, you can buy any time, but nobody turns on their heater in June and July. Well, not in North America anyway. But come November, December, January, February, yeah, your heater's on. And by March, you're getting pretty low on your oil. So that's the time to buy. That's when the oil goes up. Now, certain companies go up certain times a year, and it's very predictable. That's called seasonality. How does a stock react based on a certain time of year? That's a known reason. If you know when a stock is going to move, great, take advantage of it. So what do I like? I like dividends because dividends come every 90 days. That way I can predict every 90 days if a stock has a tendency to move up just before the EX date. Well, how do I find that out? Well, years ago, I had to do this little trick. Where the heck was it? Come on. Gonna go Yahoo Finance. Okay, so I'm going to Yahoo Finance right now. Remember I told you this screen here is live on YouTube? Okay, so you can watch it on your big screen TV, sit back on your couch, on your recliner, grab yourself a beer, some popcorn, whatever. Let's take a look. What do I mean by historically? Well, for that, we need the data stream. What's the data stream? Well, here's the data stream right here. You go to Yahoo Finance, you put the information in, come over to historical, and look what you got. A bunch of numbers. A bunch of numbers don't mean anything until you know what they mean. Well, we all know this over here. These are the dates. June 9th, June 7th, 6th, 5th, 4th, 3rd, May 31st, 30th, 29th, so on and so forth. The date. The very first column, okay, of numbers is the opening price of the day. Okay, every single day this stock has traded, these numbers you will see. The opening of the day, the high of the day, the low of the day, and the close of the day, and the volume. Okay, all those numbers are recorded since the stock very first traded. Okay, if the stock is 50 years old, then you're going to see 50 sets of numbers, 50 years worth of numbers. But this is the data stream. You go down the data stream and you look. What am I looking for? Okay, I picked a bad one to choose. Let's go to a different one. If I go to a different one, it makes a little more sense because I'm reading the right information. Why does it say that it doesn't have that one? Okay, try to find out Microsoft. MSFT. Okay, that's not what I want to see. I want to see the data stream. There we go. Okay, give me a second. I'm going to get the data stream for Microsoft so you have an idea what we're talking about. Okay, here's the data stream. I will look at the maximum amount of data. It's going to take a while to load, but what are we looking for? All right, it's going to take a minute to load because there's an awful lot of data. But what I'm looking for is the dividend date. And then we look, how often has the stock increased before that date? Well, give it a second. That's a lot of information to load. But once we get the information, we can see how consistently the stock moves up before the EX date. Okay, so we're looking at March 13th, 1986. That's the first time Microsoft was trading. That's the very first day, March 13th, 1986. So currently. Okay, here's all the numbers right here. The open, high, low, close, volume. Okay, I want to get to the dividend. All right, here's the dividend right here. Now, when I say stocks have a tendency to go up just before the dividend, well, if the dividend is on the 15th, 10 trading days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, so 10 trading days before the dividend. See, the dividend is here on the 15th. 10 trading days would be right here on the 2nd. Okay, it opened up at 397. Okay, the day before the dividend, 423 was the high. Okay, if I keep looking, am I going to find that exact same thing every 90 days? I don't know. Let's find out. 2, 4, 6, 8, 10. Okay? 10 days before the EX date, 401. The very same day, 408, 412, 414, 415, 420, 420. Okay? It has a tendency to go up. Now, I like 1%. I like to jump in, grab 1%, and get the hell on out. Because I'm not greedy. I'm happy with 1% because 1% is over 50% per year, and I'm okay with that. Dave 99, you want to look at Macy's? Jeffrey, good evening, folks. ASO looks interesting. ASO, really? ASO. We'll take a look at it. Peebly Weekly. Are you doing the roll over each week on this example? I mean, roll it the following. Okay, Peebly, I know what you're talking about. Really, I do. But on Friday at 3 o'clock, that is when I check the numbers. What did I buy it for? What did I sell the option for? What's the stock at now? And what's the value of the option now? I look at all those numbers and then I calculate what is the best situation for me to do today. I'm talking about 3 o'clock on a Friday afternoon because the market closes at 4. So it's the last opportunity I have to do anything to see, am I making money? Am I not making money? Am I rolling it forward? Am I letting it expire? Am I letting it go? A lot of unanswered questions. The great John F. Kennedy said, we cannot answer the questions of tomorrow with the knowledge we possess today. Which means I don't know what I'm picking on Monday, and after I do pick them on Monday, I have no idea what's going to happen until Friday. But I like odds and probabilities in my favor. Here's my odds and probabilities. Number 1, they got a dividend coming up. Number 2, they've consistently increased their dividends for more than 20 years. Number 3, stocks have a tendency to go up just before the dividend date. Number 4, the numbers are telling me I'm making my 1% or more. Number 5, the chart is telling me it's not at the high, it's not at the low, it's somewhere in between, and it's in an upward trend. Those are the 5 things I'm looking for. Okay, so odds and probabilities in my favor. I only want to look at companies with 20 years of increased dividends because if and when I get stuck with a company holding it longer than I want to, ideally just 5 days, that's ideally, buy it on Monday, be out on Friday, that's ideal. Yes, it happens a lot. Not all the time. Every once in a while I'll have to carry something. The longest I've ever held on to anything, I think it was 9 months. And that was Kimberly Clark. But here's the thing. I held on to it for 9 months. I collected dividend, dividend, dividend. 3 dividends I collected. Okay? But 3 dividends, I also collected almost 15 to 20 premiums. Premium, 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 dividend, premium, 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 dividend, premium. 9 months. Longest I've ever held anything. Now, I've been trading for over 20 years. Longest I've ever held anything, Kimberly Clark, I held it on for 9 months. This time, I'm holding on to Lowe's and AEO. Now, I bought both of them in the beginning of April. Okay, I bought AEO April 1st. I bought Lowe's, I think it was April 7th or April 8th. But I still have both of them. Now, I have no intention on selling them. Okay, I've only lost money once this year. Okay, and I believe that was Albemarle. Okay, so I lost $600 on Albemarle 1 week. Alrighty, but other than that, I'm doing pretty damn good. Anyway, yeah, so Beebly Weekly, it all depends on the numbers. The numbers tell me what am I going to do this week and what am I going to do next week. Am I going to roll it? Am I going to hold it? Am I going to let it fold? You got to know when to hold them, know when to fold them, know when to walk away, and know when to run. I'm missing all these questions right there, bases. Whoops, hold on. If it doesn't hit your target strike price, you still get the premium. You get the premium at the exact moment. Okay, now there's a reason why. Okay, there's a reason why I buy first thing Monday morning. I do most of my trades on Monday morning. Why? Because I'm selling time. That's it. Time decay. So let's say hypothetically, John Deere, which at the moment is 368. Okay, let's say hypothetically I buy it first thing Monday morning at 368.58. And let's say it does absolutely nothing all week long, and Friday afternoon she ends up at 368.58. Well, what does the person gain that bought it from me? Well, it doesn't gain anything. What do I gain? I gain that $4.65 per share as a premium for me to hold it for them. That's kind of like having a car sitting in your yard. Say, hey, I want to buy your car. Sure, give me $100. Come back on Friday, pick it up. If I come back on Friday, I'll pick it up. If I don't come back on Friday, I sell it to someone else the next week. Simone, how are you today? All right, so that being said, I'm selling time. So first thing Monday morning, 9:30 a.m., I would buy it. 9:31 a.m., I would sell the option. All right, it's a lot quicker than that. It's usually instantaneous. If I buy it at 9:30, usually 9:30:05 or 9:31. Anyway, it's like 5 or 6 seconds later. Okay, but it's usually instantaneous. Buy and sell at the exact same time. Why? That's the most value I'm ever going to get, because the market on Monday for next week, it starts Monday morning at 9:30. It ends 4 p.m. Friday. So that is the absolute most time value I will have for the week. First thing Monday morning, last thing Friday afternoon. I am selling that time. For that person, whoever buys it from me, okay, anytime between Monday morning and Friday afternoon, they have the right to buy it from me at $367.50. Okay, and for that privilege, they pay me $4.65 per share. So if I get 1,000 shares, that's $4,600. If I get 100 shares, it's $460. If I get 10 shares, well, no, it has to be 100 shares. It's got to be increments of 100. So 100 shares equals 1 contract. 500 shares, 5 contracts. 1,000 shares, 10 contracts. Okay? So that's what I'm looking for. I'm looking for a good quality dividend stock. I'm looking for it to buy it while it's going on upside, just before they pay their dividend. Make sure the number's right, make sure the chart is right, and make sure it's a company I don't mind owning and holding, because there's no guarantee that I may be only holding it for a day or 2 or 3 or 4. There's no guarantee there, because the stock goes up, stock goes down, stock goes up, stock goes down. Right now, John Deere has a 30-day high here, 30-day bottom here. Well, where does it usually go after a 30-day bottom? Usually, it goes up after a 30-day bottom, because you have here All right, I'm taking my profits. Thank you, thank you, thank you, thank you. Whoops, way too cheap. Let me buy some. And she goes back up again. That's all they do. They go up, they go down. The idea is to buy them low, sell them high. And you can't get any lower than the low of the 30-day period. Here's the 30-day high. Here's the 30-day low. Now, until you isolate when the 30-day low is, that's the one you jump in. Jump in with the 30-day low. Sorry about you guys over here on Instagram. Some strange reason, the phone is 6 feet away from the internet box, from the Wi-Fi box. So I don't know why it keeps saying pause due to poor connection. It's 6 feet away. It shouldn't have a poor connection. Anyway, besides the point. I'm thinking, if I plug that directly into my computer, would that be a better signal? Let's find out. Here we go.
Come on. Come here.
It still says poor connection. I don't get it. Even though it's corrected. Alright, never mind. Alright, so let's go some more questions. Troy, how you doing, Troy? Consistency is key. Thank you for that. Everyone is going to have to learn for themselves. We all want to get rich quick. They will learn. Troy, you're absolutely correct. Okay, if you can't, or if you don't, or if you find a difficult time getting the green monster under control, that's the greed. Greed will make you do stupid things. Because hypothetically speaking, if I'm here at 370 and I'm getting a higher percentage rate than the one in the money, I might go for one further out because it might give me more. But more return is more risk. I like less risk, more consistency. Okay? I like consistency with less risk. Jolie, how are you doing today? Worth buying into NVIDIA now. All right, use your 1851 and 039. Hut, hut. Sorry, no. I don't do NVIDIA. NVIDIA does not. Well, actually, they do have dividends, but they're absolutely horrible. I'll show you. NVDA. Is that right? NVIDIA at 120? Huh. Oh, yeah, 1200. Okay. Yeah. Two things wrong with that equation. Number one, it's $1,200 a share. $1,200 a share. Look where it was a year ago. 40 bucks. Is that right? That can't be right. Anyway, but it's $1,200 a share. Okay, I don't do anything over 250 because I don't have as much money as you think I have. If you think I can afford 1,000 shares at $1,200 a share, yeah, no. I keep all my trades under $250 a share. Okay. Second reason. The 1207s. 1207s are going for 37 bucks. Okay, so let's take $37.60 and we divide it by the purchase price. $1,208. Okay, granted I'm getting 3%, but look at this. It is at the high of the year. Okay, since January, look at the run-up since January. From here, runs all the way up to here. That is the high of the year. If you think it's going higher, hey, more power to you. Okay? Okay, NVIDIA has its dividend on Tuesday. Take a look. The dividend for NVIDIA is Tuesday. Now, does everybody see that number? Now, there's a reason why I show this online. live on YouTube. That allows you to look at this screen on your big screen TV or on your computer, because you're not going to see this number here on your phone. Alright? What is that number there? That is the amount of the dividend. Guess what the dividend is? You're paying $1,200 per share. And your dividend, check this out, this is a deal and a half. Your dividend is 1 penny. Okay, so you tell me, is it a wise idea to jump into NVIDIA if they're giving a penny per share? Now, at a penny per share, there's no possible way on God's green earth they can increase their dividends every single year for 20 years. No way at all. Because they're at a penny per share. So if I'm paying $1,000, I want to at least get $12 for a dividend. At least. That's 1%. Okay, 1 penny, that doesn't even, how do you equate that on a calculator? Okay, for the fun of it. Let's just do it for the fun of it. Okay, so I'm making 0.01, 1 penny, and I'm going to divide it by the purchase price. $1,208. Okay, it comes into an error. An error on my computer, on my calculator. Yeah, that is absolutely horrendous. Alright, never mind. I'm not even going to go there. I'm going to say, who in their right mind would pay $1,000 just to collect a 1 cent dividend? That is beyond nuts. So, usually 1851039, blah, 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 blah. I'm saying no to NVIDIA. But that's just me. If you like NVIDIA, hey, more power to you. ARK, yeah, Steve, ARK's a no also. ARK has not paid 20 years of increased dividends. Okay? ARCC. They have the dividend on the 14th. It's 48 cents. ARCC. Yeah, they're at 21 bucks, and they're at the high of the year. Okay? The high of the year, and they're a monthly. Okay, I don't do monthlies. Okay, Stephen, why don't I do monthlies? Well, here's the thing. Number one, there's only 12 months in a year. So if I'm getting 1 or 2% per month, I can only do it 12 times. So I'm only collecting 12 additional checks. Now, we already know that more than likely ARK pays quarterly dividends, which is 4 times a year. Okay, great. Let's take that off the table. I'm talking about the extra income from the options. From the options, I can do it 12 times. 12 times a year, that's all I can do. And the numbers never work out. I'm going to show you in just 1 second. I like weekly options. Why? Because I get 1% a week. That's 50% a year. If I get 1% an option here, that's only 12% for the year. 12% is not even close to 50%. Okay, I'm not a math whiz. I did not go to college. I do not have a college degree. But I do know that 50% is better than 12%. But you know, I could be wrong. You may like 12%. You may like whatever it is ARK is giving you. But let me go through the numbers just quickly. ARK at the moment is at 21.53, so I can buy it at 21.60. So the 22s is going for 0 cents. The 21s is going for 45 cents. But if I buy it at 21.60, I sell it at 21 and I get 45 cents, I'm losing 15 cents per share. And then I'm stuck holding it for 2 weeks. And if I don't hit my target, I gotta wait another 4 weeks. And then at 4 weeks, how do I figure out where it's going in 4 weeks? Because you can only have one high, and here's the high right here. So what's going to happen now? It's probably going to drop. Probably. But I don't do monthlies because the numbers just don't work for me. I like weekly options. I can do it every week, every Monday. It takes me less than 10 minutes. I have found that people spend more time planning a vacation or a barbecue, a weekend barbecue, than they do taking care of their own personal money. They do. It's so weird. Okay, hey, 10 or 15 minutes a day, you can get a 50% return on your invested dollar. So let's not say it's your invested dollar. Let's say it's your retirement. Because at some point, whether you want to agree or not, whether you think I'm right or whether you think I'm wrong, 65, time to retire, is going to come. You have two options. You can age out or you can walk out. What do I mean? Well, at some point in time, you're going to get to an age where they're going to call you and say, hey, buddy, thank you for all your service. Here's your gold watch. Get the heck out. That's called aging out, where they actually throw you out. I said, all right, you're just too old to work here more. Dude, time to go home. Watch the grandkids. Watch the paint dry. Watch grass grow. That's aging out. Walking out is when you get enough money in your account so that you can make enough to live comfortably. Now, whatever one you do, your money is coming from somewhere. Okay, Social Security, great. If you think Social Security is going to be enough for you, fine. More power to you. But if you work, you have money in a 401k, you have money in retirement, you inherit something, you have something somewhere. Okay, 401k usually is managed by someone, and they take your money and they put it into the stock market, or they put it into bonds, or they put it somewhere to get a return. So whether you do it or not, your money at some point in time is being invested to get a return. Unless, of course, you just have a big fat chunk, kind of like Scrooge McDuck. You just go in and you grab a few bucks and that's it. Doesn't really work that way. But if you take into consideration, hey, this is my money, I want to take responsibility, I want to invest in myself, because nobody has more interest in your money than you. You think these guys that are the money managers and these bankers have your personal interest in mind? No. You ever listen to Susie Orman? She may be good at what she does, but if you listen to her closely, she will downright out and admit when she worked on Wall Street, she sold people crap. She said, I can't believe all this crap that we had to sell people. Because when you're buying something from someone, are you buying what's right for you, or are they buying what they're stuffing down your throat? Now, just for the fun of it, you see this? Every single week, you guys rattle off stocks for me to take a look at. Okay, every single week. And I write them down, okay? But every single week, I must have looked at thousands of stocks that you guys suggest. Out of every single one that you guys have suggested since January, since I started doing this, only 2 escaped my radar that I didn't notice. Oh, how come I don't have that one? Whirlpool was one of them. I forget what the other one was. But yeah, Whirlpool should have been on my list. Well, it's on my list now. I forget who that was who pointed that out to me. But only 2 since the beginning of January. Most of the stuff you guys buy is crap, in my humble opinion. Okay, I look at some of it and I think to myself, what the hell were you thinking when you bought that? It's really not that difficult to go in and find out, what does the company do? How well have they been doing it? How profitable has they been? How safe and secure is my money? These are questions you should ask yourself before you do anything with your money. Don't listen to a word I say. You don't know me at all. Do your own research. Do you like ARK? I don't like ARK. I don't. I have no idea who they are. I have no idea what they do. Okay? I have no idea. Well, you know what? Let's find out. Let's find out how much ARCC, is that right? Yeah, CC. How often have they increased their dividends? That's what I want to find out. Okay, well, here it is right now, ARK. I want to look at dividends only. Come on. Open up. Open up and let the sun shine in. Come on. It doesn't want to open up. Isn't that horrible? Alright, there it is. Dividends only. Okay, so now we're looking at ARK. Alright. December 22nd, 04. Okay, great. They have 20 years of increased dividends because their first dividend was December 2004. So that's 20 years. Great. Well, let's take a look at the numbers. 30 cents, 32, 34, 36, 40, 50, 41, 42, 42, 40, 35, 37, 43, 38, 43, 38, 38, 38, 38, 38, 39, 42, 42, 40, 41, 36. They're up and down. There's no consistency or predictability there. So why would I want to do that? Which time frame do you most when you're looking at charts and candles? All right, Danielle, I look at the 1 year, 90-day, 30-day seasonality. Okay, I want to know where's the high of the year, where's the low of the year, what direction is it going? The last 90 days, that's the last 3 months. Okay, it's a good time frame to go by because people can remember, 3 months ago. Can they remember 6 months ago, 8 months ago? No, not really. But 3 months ago is really not that long ago. Okay, and then the last 30 days, that's the most important. Okay, yeah, so I don't like ARC for 2 reasons. One, there's no consistency with the increasing on the dividends. That's one. Number 2, they're monthly. The numbers just don't work. All right? If I buy it at $21.60, sell at $21, I'm getting 45 cents. I'm losing money. That makes no sense to me whatsoever. You may like ARC. More power to you. Okay, Steve? Hope that answers your question. More questions. Troy, thank you. All right. Julie, thoughts on Kohl's dividends next week. Do you call on Monday or wait to see if dividend rise price? Julie, I do all my trades on Monday. Okay, let's take a look at Kohl's just for the fun of it, because Kohl's is one of my favorites this year. It's funny because I have certain stocks every year that look great, but certain ones pop up and they're good for a while and then they fizzle off. All right, so Kohl's, very first thing I want to look at. When are they paying their dividend? Kohl's. KSS. Wednesday. Now, Julie, normally I do not buy the week of the dividend. Why? Because the stock has a tendency to go down just after dividend is paid. Okay, remember, I like predictability and consistency. Okay, it's very consistent that stocks have a tendency to go down after they pay their dividend. Okay, they go up before the dividend is paid. So if I was going to like Kohl's, I was going to like it on the 28th because there was no trading on the 27th. The 28th, if I made my target, great. If I didn't, premium. If I didn't make my target, premium. If I didn't make my target, premium dividend. Okay, that's like quadrupling your returns. So if you're just a stock buyer and you're buying dividend stocks, great. Why not sell covered calls before that? Okay, so if I buy it and I sell covered calls, what am I thinking of collecting? Well, here we go. The current price, $22.91, so I'm going to look at the 23s. The 23s is 29 cents. That's over 1%. Great. Kohl's is over 1%. All right, fine. What is the chart telling me? That's the next question. Okay, here's the high, here's the low, here's what it was, here's where it is. Actually, it's a double high. Okay, a year ago and a couple weeks ago. Well, let's take a look. All right, a year ago, we're at 22.10. Basically the same price where we are now. Okay, she topped out in the beginning of August at 29.62, bottomed out in middle of October at 17.73. So we know our high and we know our low. Okay, and she hits a high again, 29.62, April 1st. Drops down, pulls up. Look at the movement. Okay, up, down, 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 up, down. That's all it does. Up, down. I want to know the right time to jump in. So look where she is now. Okay, it's a high here. See, high here, drops down, comes back up, drops back down. Look at that. That's a new low right there. But look where she is. She's coming up. All right, so I want to zoom in, take a better look. Where are we? Okay, so 90 days ago. Look, here's your high, here's your low. That's where it was. This is where it is now. Okay, so she comes down, goes up, down, up, down, up, down, up, up, down. Ooh, look at this gap. That gap is going to fill. And we talked about this a couple weeks ago. Because look, she went 2 days to the upside. She went up too fast. So it pulled back. But she's probably going to go back up and challenge this 30-day high right here. So take a look at the last 30 days. the last 30 days. The last 30 days, 24.57, 30 days ago. Here's our 30-day high. Pulls back, goes up, pulls back, goes up, pulls back. Okay, it's not quite the bottom yet. The bottom was right over here, but she went up and pulled back. So there's one green day here. Where's it going next? Well, I'd like to see on Monday. I'd like to see tomorrow what's next. So I can't really give you a definite answer whether I'm jumping into Kohl's next week or tomorrow, because it's not really clear to me. Now, if tomorrow's a green day, I might think about it, because at this current price, I'm making over 1%, which either one. I would prefer to do the 22.5, because the 22.5 gives me my 1%, and then the stock doesn't have to move at all. But at the 23, yeah, it's got to move up 8 cents. Okay, but it still has to move up 8 cents. 8 cents is not a lot, but at the 22.50, it doesn't have to do anything, and I'm still getting my money. Okay, if it goes up, make money. Stays the same, I make my money. It can even come down a little bit, and I'll still make money. That's what I'm looking for. Safe, predictable, consistent, 1% per week. Kohl's perfect opportunity. However, I'd like to see what the number looks like tomorrow morning. That's just that plain and simple. Okay, let's take a look at a couple more questions. Julie, I hope you answered that question for you. Mikey G's in the house. How's it going on, Mikey G? And Fascinating Football Videos showed up. We can all say, about time you show up, dude. All right, hold on. Okay, there we go. Simone. Am I buying? Okay, Simone, you should know better. I do not buy calls. I don't. I only sell them. Okay, I like safe and predictable. When you buy a call, you're hoping the stock goes up. When I'm selling a call, I really don't care if it goes up or not. All right, Seth made a rookie mistake and bought a monthly last Monday. Sorry, dude. Can't help you out with that one. Now, don't get me wrong. I make mistakes too. Okay, I remember this year. I think it was with Walgreens. I think that I bought it. I bought the stock. I sold the option. I ended up walking away with a penny for the week per share. I said, "You gotta be kidding me! How did I make that mistake?" But hey, I do make mistakes, even after all this time. And I know this for a fact. I went on TikTok and I came out and I think I did 2 videos. I fucked up, I messed up, I did this, I did that. I'm just admitting it. I do have that video out there that says, hey, I made a mistake, because I do make them. When I make a mistake, I'll tell you. So, Simone, let's take a quick look at Macy's. I don't buy options. Okay? Seriously, I don't. I sell options because I'm looking for a safe, predictable, consistent return. Now, first thing I want to see, 1847. I'm going to look at the 1850s. 1850s, 38 cents. That's more than 2%. That's awesome. However, the chart, what is the chart telling me? Is it the right time to buy the stock? If I don't. Now, I don't own any Macy's at the moment. But here's a funny thing I want to show you. Right here. Now, as we all know, this screen is live on YouTube, so you'll be able to see it. Now, I want you to look behind me. Okay. Week 1, Macy's. Week 2, Macy's. Week 3, Macy's. Week 4, Macy's. Week 5, Macy's. Week 6, Macy's. Week 7, Macy's. Week 8, Macy's. Week 9, Macy's. Week 10, Macy's. Oh, no Macy's on week 11. Week 12, no. Week 13, no. Week 14, Macy's. Week 15, Macy's. Week 16, Macy's. Week 17, Macy's. Week 18, Macy's. Week 19, Macy's. And no Macy's this week. I've owned Macy's for a majority of the year this year. Why? Well, because look at the premiums they're paying. 1850 is going for over 2%. And it's Macy's. They've been in business for over 100 years. They consistently increase their dividends for 5 decades or more. Better than that, a few months ago, they had a buyout offer. And they said, oh, hell no. Before we sell, we would buy back our own shares at 24. Look, it hasn't seen 24 at all this year. But Macy's threatened whoever was trying to buy them up. Oh, hell no. We will buy our shares back at 24%. We ain't selling. That's what Macy's said. So how can you not have Macy's in your roster? Well, I don't have it this week because it hit my target 2 weeks ago. Okay, and it was at, I'm going to show you the numbers. Hold on a second. A year ago, 15, bottomed out at 10.50, topped out at 22. Okay, and that was back in March. Okay, so from the high of March, look where we are. Downward trend. Look where we are right now. This is buying opportunity. This is a 90-day time frame. Here's your bottom 90 days. She went up, pulled back. Not quite the 90-day bottom, but that is a 30-day bottom. So let's take a look. 90 days ago, we opened up at $20.50. A couple of weeks later, we have our 90-day high. Okay, the 90-day high was 22.10. From there, the 92 bottom was in the beginning of May 1802. All right, so for the last 30 days, okay, check it out. The last 30 days, you cannot get any higher than the 30-day high. 2 weeks ago, I got rid of Macy's because it hit my target. Great. Right up here. This is where we were 2 weeks ago. I was not going to jump into Macy's when it's at a 30-day high. But the funny thing is, last Monday, not, this Monday, but last Monday was a 30-day high. Actually, that was Tuesday. Sorry, because there's no trading on Monday. 30-day high, she drops. 30-day bottom was on Wednesday. Now, Thursday and Friday are a little bit higher, but not 2 days up to go to the upside. Because here's your 30-day top. Your 30-day bottom is going to be around here somewhere. So when is the best time to buy? Your best time to buy is at a 30-day bottom, which is right about now. So I am putting Macy's on the list for tomorrow. Only because I'm curious, will it open up higher tomorrow? And if she opens up higher tomorrow, 1847, 1850 is going for 38. That's 2%. Okay? That is an opportunity where I might actually take a loss on either AEO, okay, because I'm into AEO at 26, and right now it's at 21. So I'll check the numbers on it. If I take the loss on AEO and make 2% off of Macy's, will that satisfy the loss? And it's all about the numbers at that point, because I very rarely will ever take a loss. We call it a missed opportunity situation. Okay, if money is sitting in a stock that's going down, so should I get rid of it, take the loss, and then jump into a company that's going up? Well, the loss is a loss, but is the gain from Macy's going to I'm going to trump it? Is it going to, make it okay? So yeah, I don't know. So it'll be all about the numbers tomorrow morning when we get there. Okay, so look at some more questions. Seth, sorry that you bought a monthly, dude. I try to stay away from them. Wade, how are you doing? Simone. So on Friday, the calls is close by itself on Friday at 4, or you close it. All right, I like to close it before 4 o'clock. That's why I jump in at 3. Okay, I don't look at the stock, but contrary to popular belief, okay, I don't look at the stock market all week long. I really don't. I don't look at my account until I jump on in the morning, and then I have fresh eyes just like everyone else. Okay, it would not be right, in my opinion, this is the way I think, it would not be right for me to sit in front of my computer all weekend long trying to find good trades to buy and then tell you it only takes 10 minutes. No, I don't do that. Okay, first thing Monday morning, I'll open the computer and say, hey, this is what we're looking at. Wait a second, let's find out. Okay, this is what we're looking at. Okay, and I'm looking at it at the same time you are. Okay, if you're trading with me live. So a lot of people don't know that. I don't sit and I don't look for good trades. I look at them at the same time you look at them. Okay, when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. The 10-Minute Trader means you should be able to do this within 10 minutes. Okay, so if you're looking at the month, all right, tomorrow is the 10th. I want to look at only these stocks and those stocks only. I'm only picking up 2 stocks tomorrow. That's it, just 2. Okay, so I don't need to look at all of this crap or all of that crap. Just the ones that have their dividends in 10 days or 2 weeks. Okay, this is just one list. I have a bunch of lists. So I have about 15 companies to look at tomorrow. And I'm pretty sure if I don't come up with one of those companies out of those 15, I'll do Macy's. Now, Macy's doesn't have their dividend coming up. When does Macy's have their dividend? The 14th. That's just Friday. Ooh. And it's almost 1%. Are you thinking what I'm thinking? Hold that thought. Okay, so if Macy's dividend is this Friday, right? And if I buy it tomorrow morning at 1847, sell somebody the rights to buy it from me at 1850, the difference between 1847 and 1850, granted it's only 3 cents, but here's the thing. That's 3 cents per share. And this is over 2% per share. Well, let's find out exactly. 0.38 divided by 1847. It's 2.05. Okay, so 2% from the premium, 1% from the dividend, and then an additional 3 cents per share from the difference of the stock price and the strike price. That's what we call a triple play. So yes, Macy's just jumped higher on my list. Now, do I care that the dividend is this Friday and there's a tendency for it to go down on Monday? Yeah, because see, right after it, I'm not really thinking about that. What am I thinking about? I'm thinking about grabbing 3%. So that alone may be worth getting rid of AEO tomorrow or Lowe's, depending on what the numbers look like. It always comes down to the numbers. But I'm telling you, if I can get 3% on Macy's, and Macy's has a potential triple play, what's the triple play? Well, the dividend, the premium, and the difference between the purchase price and the strike price. That's 3. If she stays above 1850 come Friday. Well, let's take a look at the chart. What is the chart telling us? Okay, the chart's telling us here's where we were a year ago. Here's our bottom. That is a pretty good solid bottom. Here's our top. Here's where we are right now. Where is she going? Well, she's channeling to the side. Okay, she's channeling this way. Okay, here's your top here. Here's your bottom. She's going to shoot up. Normally, that's what it looks like. Okay, could it not do that? Yeah, it could keep dropping. It could. But I like odds and probabilities. The dividend's coming right up. The dividend's this Friday. Okay? They're a dividend king. Means they've increased the dividends for more than 50 consecutive years. They've been around for over 100 years. Almost everybody in the United States knows who Macy's is. Come on, they have the Macy's Thanksgiving Parade, the Macy's Christmas Parade, the Macy's Easter Parade, the Macy's New Year's Day Parade. Okay, Macy's is the company's just huge. All right, anyway, yeah, so Macy's just jumped to the top of my list for tomorrow. All right, no name. Do you have some automatic program that sells the calls after you buy the stock? Ooh, that's a good question. Very good question. So here's the thing. Now, normally, if I own a stock, like from last week, I'm bringing over from last week AEO, Bitto, Kohl's, Lowe's, and Wynn. I'm taking those 5 stocks from last week into next week. Those I have to do manually. Okay, so as soon as the stock market opens, I see what the numbers look like, and I'll do that manually. Other than that, if I'm buying a new position, I will do it in it. Okay, this is another reason why this is live on YouTube. Okay, I am going to show you what I normally do, and that's going to show you these little tiny numbers. I change from single to covered stock. That's where I'm buying the stock and selling the option at the exact same time. I'm only paying one commission rather than two. Alright, and I like it at 1850, so I come here, I buy that right there. Get rid of this, that way you can see. This way you can see better now, alright? Here's the trade. Okay, I'm selling 10 contracts, Macy's at 1850. Okay, limit order for the day. I don't do limit order when I'm buying. I do market order because the stock and the option are joined together, not two separate pieces. The two separate pieces, I would do a limit order. But here, I'm buying stock and selling the option all at the exact same time. Okay, so I hit click and send, confirm and send, and the trade actually pops up. Okay, and then I read it out loud. I tell everyone, read it out loud. This way you're hearing it and you're seeing it to make sure you're doing it right. Now, I've been doing it for over 20 years, and every once in a while, I do make a mistake. Okay, so buy 10 covered Macy's 100s. Those are the weeklies. Okay, the M100s. 14 June 24. That's this coming Friday. 18.5 call. Okay, I'm selling the 18.5 call, and I'm buying Macy's. So it's 18.5 call / Macy's market to open to open. To open to open. I'm opening an option order and I'm opening a stock order. Both. Okay, eventually I have to close both of them, and I'm hoping that comes on Friday. Okay, where the option either expires or somebody buys it from me, one or the other. Now, next down on the list is the profit. Okay, break even, 1802. Okay, see, if the stock even comes down, I'm still making money. 1802 is my break even. My maximum profit, $480. Let me get my calculator out. Clear this, put $480 in there, and then I want to divide that by my investment. My investment is $18,026. Okay, if you don't have 18,000, don't buy 10 contracts. Don't buy 1,000 shares. Okay, 18,026. 18,000 to 6, and it gives me a grand total of 2.66%. That's just for the option. Okay, now remember, I'm buying it below 1850. So if it hits 1850, I get that little bit of additional money, and I get the dividend on Friday. Unless whoever buys this, whoever pays me that money, says, you know what, I want the dividend, I'm going to buy the stock on Tuesday, Wednesday, Thursday, or Friday morning. Then they can do that. It's their right. Okay? I'm collecting 480, which is 2.66% for the week. Whoever's buying it from me, they have the option. Now, when it's a call option, it's an opportunity, not an obligation. A put option, you are obligated. Okay? I don't like put options because it obligates people to do stuff. Okay, and I don't want people telling me what I have to do. Alright, so I'm not doing this, so get out of there. Get out of there, and let's get back to where we were. Back to where we were would be right there and right here. Okay, so let's go back to some more questions. So, no name. I do not use a program to do this. I do everything by myself. I don't trust computers as far as I can throw them. That's why I write everything down in books. I do. Worst case scenario is I can lose the book. That's, you know what really sucks about getting old? You have to write stuff down. And what's even worse than that? That's where you forget where you wrote your stuff down. Write it down so you don't forget. What's worse than that? Oh, forget where you wrote it down. Can we take a look at Oracle today? Yes, you asked about Oracle yesterday. Let's take a look at Oracle. Let me ask a couple more. No, let's take a look at Oracle right now. O-R-C-L. Oracle's going to be a no. That was pretty quick, wasn't it? Hakun Lundis. Okay, Oracle's a no. And let me tell you why Oracle's a no. Your 30-day high, your 30-day bottom, look where you are. You really think, because you get 1, 2, 3, 4, 5, 6. Tomorrow's Monday, which means if you think it's going to go up Monday, Tuesday, Wednesday, Thursday, Friday, that's up 11 days in a row. Have you ever seen Oracle go up 11 days in a row? 1, 2, 3, 4, 5, 6, 7, 8. Down day. Okay, no. Okay, so if I am going to do it for tomorrow, first of all, 125.91 to 126 is going for $4. Nice premium, but look where she is. Your 30-day bottom's here. Okay, last week. If you think it's going to go up for another 5 days, more power to you. Me, I personally don't see it. I don't like getting it at a high. That is way too close to the 30-day high. Because what's going to happen? You have all, look at this, from 114.50 to 125.90 to 126. 114 to 126. That's $12. That's a $12 move. If you seriously think these people here, whoever bought all this, aren't going to take profits and bring that thing back down, sorry. All right, Hakunas, you know I don't do NVIDIA. NVIDIA is absolutely horrible. Yeah, but NVIDIA is paying me 1 cent dividend. 1 cent dividend. And it's a $1,200 stock. No, absolutely not. Not for me anyway. If you like it, hey, more power to you. I don't do NVIDIA. Okay? All right, no name. My man, my connection is fine. Yeah, but I'm talking about the connection over to Instagram. Okay, because, I got YouTube, TikTok, Facebook, Instagram, and YouTube. So I got 5 cameras going. I'd like to add a few more cameras next week. Bring in Truth Social, bring in X, and bring in LinkedIn, and bring in Rumble. Ooh, that'd be 9. That'd be 9 cameras. Holy cow, that would be cool as hell. Split 10 to 1. Yeah, okay, fine, dandy. So it's $120 a share. It's still only paying 1 penny dividend. 1 penny dividend. Okay, 1 penny dividend. Let's see how often they've increased their dividends to their shareholders. NVDA. Okay, well, hey, if you like it, I'll take a look. I honestly don't mind. $1,200 a share. Oh, yeah. Dividend 0.000000000. Yeah, so they've been paying dividends since 2012. That's only 12 years, and they have not increased them. The numbers, they're just not there. I'm terribly sorry. Yeah, 10 to 1. I don't know how to tell you guys. I don't like it because it only has 12 years of dividends, and they don't even increase. The dividend for this week coming up is 1 penny. Why would I buy a stock for $120? 10 to 1 split. Okay, great, fine, dandy, big whoopie-doo. They're only paying 1 penny dividend. That ain't worth it to me. Okay, so when I say I like dividend stock companies with 20 years of increased dividends, NVIDIA doesn't have it. 20 years of increased dividends, NVIDIA doesn't have it. And the yield is absolutely horrible. They're only paying a 1 penny dividend. No. For me, if you like NVIDIA, hey, more power to you. You think what will happen tomorrow? Don't know, don't care. I don't do NVIDIA. Seriously. Okay? I like to spend my time on things that concern me. And those are the companies that consistently increase their dividends. It's something I would look at. I would never look at NVIDIA. Sorry. I don't do hype stocks. And that's what that is. Fascinating football fan. It will be $1.20 tomorrow. Yep, I get it. No name. Do you have a program that automatically sells calls after you buy a stock? Yeah, I do. Anyway, thoughts on Kohl's. We already did Kohl's. Kohl's had a nice bounce. Yes, it did. Kohl's is on my list. Fat Cat Fever. Wasn't that Sammy Hagar? No, that wasn't Sammy Hagar. Ted Nugent. Fat Cat Fever. The Fat Cat. No. Cat Scratch Fever. But you know what I mean. Yeah, so Fat Cat, yeah, sorry. I don't do NVIDIA. Yeah, Al's the one who gave me Whirlpool. Thanks, Al. When I started following you, I spent the first month building my list. Al, out of curiosity, how have you been doing? Seriously, I'm sure the people, because they know what I do. They don't know what you guys do. Steve, you're welcome. Uh-oh. I miss some. Okay, Mike. I'm stuck in a position since week 16. Mike, which one's that? Simone! I want to do that this Monday. What going to be your strike if you sell Macy's option? Well, Simone, if you're actually on the morning trading group, you could join us and you could trade. And then you would know because you'd see me actually doing it live. That's one of the privileges that you have when you join the morning trading group. That's what it's there for. That's what I'm looking for, people that are serious that want to do it on a continuous basis. If you're here in the evening, you gotta take the crumbs like everyone else. And I don't want to sound bad, because that did sound kind of bad. I mean, I'm teaching you the strategy how to do it. It's simple, it's easy, it's predictable, it's consistent. Okay? And yeah, I have to leave something for the people who actually pay for the service. Okay. Alright, Simone, Mike, yep. Simone, I'm selling calls at 19. Troy, good for you. Be Wise, MPC. We have a whole bunch of stocks we haven't even finished looking at from yesterday. Secretariat. If Friday is the EX day, night, it dropped Friday? No, it usually doesn't drop until the day after, because your date of record is most likely going to be Monday. Friday is the EX date, the last day the stock trades before the dividend's paid out. However, the date of record is the very next day, which in this case would be the Monday. So, on Monday, the stock will have a tendency to drop down from its close on Friday, usually. What would be total loss in AEO? See, Mike, I don't know that yet, and that I won't know until I take a look at the numbers tomorrow. Okay, so now I do like Macy's because she's at a bottom. That's one thing. Okay, so Macy's giving me a 3% tomorrow might compensate a loss if I decide to take one on AEO or on Lowe's or Win. I don't know. It depends on what the It depends on what the options look like. If I can get 1% on Win, I'll keep it. If I get 1% on AEO, I'll keep it. If I get 1% on Lowe's, I'll keep it. Okay, it all comes down to the numbers. All right, and I don't mind, crunching the numbers a little bit. But from the get-go, I want to make sure I'm making it on the get-go. All right. All right, Simone, what about if by Monday it is 1860? Okay, Simone, it's all about the numbers. Okay, when the market opens Monday morning, okay, that is when we will know what the numbers are. The mathematics are all the same. What can I buy it for? What can I sell it for? What is my rate of return? The math doesn't change. The numbers change, but the math doesn't change. So we'll figure that out on Monday. If you want out, you can always buy the put option to close. Yeah, Al, you know I don't do that. Okay, I don't do puts at all, and it would be contrary to what I'm saying. I don't like to do anything that's contrary to what I say. Okay, when I say, I do. Okay, so I buy a dividend stock, I sell a covered call, and that's it. I don't do puts at all. I don't do cryptocurrency. If I make excuses and I make exceptions, then what's my word worth? Nothing. And I prefer not to do that. Did we ever look at Intel? Nope. Intel is on the list from yesterday. Okay? Alright, so let's go over a couple more questions before I move on. Alright, whoops, right here. Your residents, you're a cool cat, but a stubborn one. Hey, you residents, there are so many ways I can make a whole shitload of money. There really is. But that's not my intention. My intention here is to teach a simple strategy that is consistent and predictable and 1% per week. If I keep changing, if I keep adding, if I keep taking away, yeah, I'll make more money, but that's not the point. The point is to give people a stepping stone, a starting point. If I make it simple, safe, predictable, and consistent, it will have more people joining the stock market and more people being profitable. Now, for those of you that want more trading strategies and more complicated ones to make more money, yeah, I do offer that somewhere else. Not here, not for free. So I'm a nice guy, but I'm not that nice. See, I'm sharing this strategy free. You don't have to do anything. You really don't need my assistance. I'm showing you right here. All you got to do is figure out what's a good company. Well, that's pretty easy. 20 years of increased dividends. Well, what are those? Dividend Kings, Dividend Aristocrats, Dividend Champions, Warren Buffett's list. Right there, it's over 300 companies. Okay, any one of them. They consistently increase their dividends. Now, do they have weekly options? Allow you to get weekly cash flow? Sure. Well, simple. What am I buying it for? What am I selling it for? Take this, divide it by that. That's my ROI. Okay, great. What's about the chart? Well, where's the high? Where's the low? Where's it going? It's really not that difficult. Okay, but more complicated strategies, more risk, more reward, more time, more effort. This should take you 10 or 15 minutes a day. That's it. And if 50% return per year is not worth 10 or 15 minutes a day, you're in the wrong place. Because eventually, okay, you can argue this point all you want. Eventually, you're going to retire. Your money is going to have to live, going to have to make a good living for you. Okay? So whether or not you give it to a money manager and have them do it for you, and them just giving you a check every month, or every 6 months, or every 90 days, whatever it is, your money is going to be invested somewhere. Okay? Whoever is investing it for you is making the money. Whether you win or lose is irrelevant to them. Nobody has more interest in your money than you. Make 1% a week on the premiums, but I'm collecting stocks that have big dips. Well, Al, if you're still making your 1% a week, I'm not quite sure where the problem is. Okay, the strategy is 1% per week. Now remember, I told you, I held on to Target for 6 months last year. I held on to PPG for 6 months last year. I held on to Kimberly-Clark for 9 months last year. Okay, I've never held on to a stock for longer than 9 months. Now, you've only been doing this for 3 months now? 4? That's not even close to 9. That's not even halfway. But you're still making your 1% per week. That's the goal, Al. 1% per week. Okay, stocks go up, stocks go down. That's all they do. They go up, they go down. They go up, they go down. Okay? Now, I'm sorry if you feel the ones you bought are coming down, but they're still giving you 1%. You're still getting your 1% somewhere. That's the idea. 1% per week, safe, predictable, consistent. Yeah, the stock's going to go down. Eventually, they're going to turn around and go back up again, because that's what they do. Not all of them. Enron went broke, but then again, Enron would never have made my list. Alright, anyway. Next, let's take a couple more questions. So, I'm being patient and waiting for the stocks to come back up. Well, sorry, Al. That's just... But I'm glad you're making your 1% per week. Hakuna. Regarding Adobe, that we looked at yesterday, you said the chart looked good, but it has increased 5 days in a row, or 4 days, and usually has a pullback after that. Please look, what do you think? Okay, hold on a second. We'll take a look at that again. Adobe, wasn't ADB? ADB, is that correct? Adobe. Yeah, I also said that I wouldn't do it because it's a $400 stock. But if you want to take a look at the chart, here we go. Here's your high of the year, 637. Okay, high at 637. If you want to make money in the stock market, you buy low, sell high. You cannot get any lower than the low of the year, which is exactly where Adobe is at this moment. Well, last week, the low of the year. 3 days, 4 days to the upside. Let's take a look. The last 30 days. Okay, here's your last 30 days with Adobe. Your high's right here, drops down, makes a 30-day bottom. 30-day top, 30-day bottom, 1, 2, 3, 4 days to the upside, and still got a long way to go to challenge that 30-day high again. Now, am I telling you about this? No, I'm just reading the chart. By looking at the chart, this is what it's telling me. Okay, here's a 30-day high, here's a 30-day bottom. Okay, she gaps down, gaps have a tendency to fill, and this is going up to fill that gap right there. Okay, there's the gap. More than likely. Not guaranteed. I'm just saying, more than likely, gaps have a tendency to fill. And here's your 30-day high, way up here. 30-day bottom, 30-day high, it's somewhere in the middle. It's going to the upside. Great. But you have 4 days to the upside. What's Friday? Friday is 5 days away. So if you're buying it tomorrow morning, you're assuming it's going to continue to go up for another 5 days, or go up high enough to at least be called out. Because at the 365, that's $17 per share that you're getting. Okay? What kind of return is that? All right. At the 465, $17. $17.80 divided by 465. That's 3.8%. So why not go into the 460? Okay? Why not go to the 460 and collect $20? Okay, well, let's figure that one out. Whoops. Okay, so the 460, I want to add this right here, the 2030, okay? So if I'm looking to sell it at 460, I'm losing $5.30, but I'm gaining $20. Okay, so what is my exit price? Well, at the 460, I add 2030 plus 2030. That would equal 480.30. That's my exit. Okay, so my exit, now I want to subtract the purchase price, because that's how my profit is. 465. Okay, so my profit's $15. Now I divide it by the purchase price again to give me my rate of return. 465, and that gives me a grand total of 3.2%. All right, so why don't I look at wait a minute. The 455s. Clear. 455 plus 23. Subtract 465, divide 465, still 2.7. Okay, so if I buy it at 465 and I sell it at 455, okay, that's $10 less than what I paid for it. I'm still collecting $23 a share, but that $23 a share comes to 2.7%. I might even be able to go for the 440s. So if the stock goes up, I make my money. Stock comes down, I make my money. Stock goes sideways, I make my money. So that's if you like Adobe. But I don't do stocks over $300. I don't do stocks over 250. So those are the numbers for Adobe. That's for over there on Instagram. All right, Al, you're being patient. That's awesome. Simone, do you charge for the morning lessons? Yes, Simone, it's $100 a month, but you're getting my attention for 30 days. Actually, it's 26 trading days. I think, or 22 trading days in a month. Okay, that's Monday, Tuesday, Wednesday, Thursday. Okay, from 9 to 10 or 11, and then Friday, 3 to 4:30, 5 o'clock, some of that area. You ask all the questions you want. Oh. So, Al, you have Kohl's, Macy's, Walgreens, Albemarle, UPS. Ooh. I'm going to write those down, Al, so we're going to take a look at those. Kohl's, we already took a look at that, but we'll take a look at it again. Kohl's, Macy's, ALB. Now, I got rid of my ALB a couple of weeks ago. I don't know why you kept on yours. WBA. UPS. UPS. All right, now, unfortunately, we probably won't get to it until tomorrow because it's almost 11 o'clock now, and I still have a whole bunch to look at from yesterday. Okay. But I'm not worried. Just need patience. All right, tell you what, Al, I can almost guarantee you, the sun's going to rise tomorrow, and the sun's going to set tomorrow. And the powers that be really don't care whether you and I make money or not. All right, your residents, scroll up. I'm getting there. I try to answer these questions. I try not to avoid questions. Do you think it will pull back in the short run since it increased 4 days in a row? Target price 612, high 7 at 711 USD. Hakuna, I really don't know. Really couldn't. I don't even. The way the chart looks, the way the chart reads, okay? You get your high here, your low here. It's in an upward trend. Okay, we won't know what it does until it doesn't. Will it do another 5 days? If it goes up for another 5 days, that's 9 days to the upside. Do you really think you can have all the people that bought way down here and see it up to here and not take their profits? Because it's not a profit until you take it. And when people take their profits, it has a tendency to bring the stock back down. So, as I was saying, when you check the numbers, whatever you buy it for, that number never changes. However, if I do it at the money, I'm getting 1783, and that gives me a certain return on my money. But if I do 460, I'm getting a certain return on my money, but it's a safer trade. If I go with the 455, it's a safer trade, and it's still bringing me over 1%. So you have to think to yourself, what is my goal? What do I want to do? Do I want it to go up and get capital appreciation? Or do I want to get that safe, predictable, consistent 1% per week? That is what I'm looking for. Okay? I'm just wanting to go up a little bit and stay where it is. Just so I can get that 1%. And more than likely, if I was going to do it, I would go for the 442.50. The 452.50. Okay, bring in the 24 bucks. I wouldn't go at the money, I'd go further in. The further up you go, the less return you get, but the safer the trade. Okay, so you're trading safety for return, and it all comes down to the numbers. Yeah, Al, that's my main concern. I'm gonna agree with you, Al. Okay, Julie, also, I'm not worried because when I buy a stock, I have no problem whatsoever holding on to it. Now, the only reason why I'm thinking of taking a loss on AEO, Lowe's, or Wynn is because opportunity costs. Guys, the stocks are down. I'm not getting 1% on those, and Macy's is offering 3% next week. So, should I wait until Tuesday to buy the stocks instead of tomorrow? What would you do? Well, Hakuna, I already told you, I don't do stocks over 250 bucks. That's plain and simple. But I like the way the chart looks. Okay, if it was a $40 stock, I'd say sure, because I like the way it looks. Okay, I do. And again, like I told you, I would buy it and I would sell further in. Take a less return. Okay, so if I'm getting 3 or 4% at 465, and I'm only getting 1 or 2% at 452, I would take the 452 because it's a safer trade. I like safety over income. Okay, safe, predictable, consistent, 1%. Granted, yeah, so it's offering 3 or 4%. Great, but I'm in a stock at 465. Yeah, that doesn't make me comfortable. Not comfortable at all. And if you have the money to do it, $465 per share trade, fine. More power to you. But make sure the numbers work, and then make sure you actually like the company. I know who the company is. I wouldn't mind buying it if it was in my price range. It's not in my price range. Okay? I mean, I like I'm not going to say Lamborghini. I like Hispano Suiza or Duesenberg. That's what I like. Or 33 Cadillac. That's what I like. Okay, but it's not my price range. Okay, all right. So let's look at more questions. More questions. I missed some of these questions. Yeah, I'm not worried about it. Thanks, Mr. Al. Thanks for the vote of reassurance. My account is about the pit was in regards to being obligated, but I understand puts, not the strategy. Okay, I already answered. Okay, fine. I missed some questions. Thank you. Great deal. Apple. All right, somebody wants to take a look at Apple? All right. I'll write Apple down. Now, Apple, AAPL, just to let you know, Apple is not on my list. I do look at it. The only reason I look at it is because Apple is on Warren Buffett's list. Hey, your residents, thanks for that gift, buddy. That was nice. Okay, so I answered all the questions. Great. Let's get back to the stock list. Next on the list is Nike. We're going to look at Nike. DVN. Devon Energy. DVN. Ooh, that looks enticing. Do you see that right there? Okay, at the bottom, 2 days to the upside. I like that. But let's look at the whole picture first. What can I buy it for? 47.23. The 47's going for 46. Not quite 1%. The 47.50 is 28. It doesn't make the numbers. Okay? The Apple chart is too high up. Okay, so we won't even bother with Apple then. Well, don't you hate that? A nice chart like this. And what do I mean by nice? Take a look. Okay, here's your high of the year. Okay? This is the high of the year. Right there, 55.10. She drops, pulled back, drops, pulled back, drops, pulled back, drops, pulls back, drop, pulled back, drop. Look at 2 days to the upside. What do you think is going next? Okay, I like higher highs. The last 2 days. This is your 30-day bottom. When you want to make money in the stock market, you buy low, sell high. You cannot get any lower than the low of the 30-day period within this time frame. Okay, the time frame we're looking at. What's it going to do in the next 30 days? Well, this is what it's already done. She dropped. Now she's got the bottom. Well, what do you think is going to happen next? It's going to go up. Usually, okay, let's take a look at seasonality. Seasonality tells us what does it normally do this time of year. Normally this time of year, ooh, look at that. You can't fake that. That is down. That makes me say no. Well, what else makes me say no? Well, if I buy it tomorrow morning, 47.23, the 47 is going for 46, I lose 23, no, ain't gonna make it. 47.50, 28, no, ain't gonna make it. It's not worth my while. Granted, the chart looks good. The regular chart, okay? The regular chart looks lovely, but the numbers don't work. So Devon is a no for tomorrow. UNIT. What the heck is that? UNIT. Unity Group. Never heard of them. That's why I never heard of them. It's a $3 stock, and it's a monthly, and it's a double no. Okay, Energy Transfer. I don't know why you guys like Energy Transfer. $15 stock. The 1550s are going for 11. The numbers just don't work. See, 1550. The 1550 is going for 11 cents. That's less than 1%. Look at the chart. I like the chart though. Look at it. Okay, get your 30-day high here. Down, up, down, up, down, up. It's going to the upside. That's Energy Transfer, if you like Energy Transfer. But it's not giving me my 1% that I'm looking for. there are too many other companies that will give me the 1%. I have two stocks that you won't like, but the charts look good. EXAI's a no, STEM's a no. Sorry, I couldn't. I can tell you right now, they're both going to be a no. AXE. EXIA. Nope. AI. Yeah. Nope. It's a monthly. Looking at the chart, it's a no. Okay? This is a no. This is a no. STEM. STEM. That's a definite no. Two reasons. Number one, it's a monthly, it's a no. It's at the low of the year, well, almost at the low of the year. The low of the year was the beginning of May. But here she is, she's in a downward trend. You gotta wait for the bottom for it to turn around. But I don't like monthlies because they just don't have the same amount of rate of return. So why would I look at 123? It gives me the creeps. Okay, at 123, you can almost guarantee they don't have 20 years of increased dividends. Intel. Somebody was, Julie, you were looking for Intel. INTC. Here we go. Intel. I actually own some Intel. MOS. Wade. It needs 2 days to the upside though. MOS. I'll put MOS down. We'll take a gander at it sometime tomorrow because we're running out of time and I have way too many up before that one. But INTC, here we go. First thing we're looking at, $30.74, the 31s, 46, that's over 1%. Okay, and I like the chart. Look at the chart. She drops and she's right down here. Okay, great. All right, so let's take a deeper look. Nutman liked my video. Thank you there, Mr. Nutman. A year ago today, 31.20. Topped out at the end of the year in December, 51.28. Okay, 51.28. That's the high of the year. From there, she drops, retrace, drops, retrace, drops, retrace. However you want to look at it. You want to call it dropping profit taking? Fine. It is what it is. You're up here. Okay. Yeah. 52. Never been there before. Of course, I'm gonna take my profits because it ain't a profit till I take it, and nobody ever went broke taking profits. No, never went broke taking profits. Only 8 p.m. and 70 degrees in Salem, Oregon. Okay, Troy, I'm not in Salem, Oregon. I'm in Sarasota, Florida, where it's nice and sunny and warm. I think it was in the 80s today, I think. Not 100% sure. But is what it is. All right, let's continue. Okay, so last 90 days, look at that big drop. It drops, finds its bottom right here. Okay, drops. This gap is going to fill eventually. Okay, so you might be happy about that one, whoever likes Intel. Okay, she drops here, that's going to fill. That's in the $35 area. Right now it's $30. Okay, so I like Intel. Is it going to keep going up? Don't know. We will find out though, won't we? What the heck is that? What the hell was that? That never happened before. They have a very nice risk-reward ratio, huge potential to the targets. Is it important to wait until the downward trend changes despite if it has dropped so much? Hakoon, I'm not 100% sure. Are we talking about Intel? Or are we talking about those stocks that you liked? Because Intel, there's no clear direction of which way it's going. Okay? J.D. Roach, can you get assigned and have to sell your stocks with a covered call? Yes, you can. But that's the goal here. The goal here is to buy a stock, sell a covered call, have it called out, and to be back into cash the following Monday to do it all over again. Big Rich's SPY is a no. I don't do indices because indices do not pay dividends. So when the index goes down, what do you collect? Nothing. SPY, SPY. Yeah, and it's at an all-time high. That's a double no. Okay? See? It goes up, comes down, up, 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 down, up. Right now, it's at the high of the year. So if you think it's going to go higher, great. But here's a question. When it starts going down, what are you collecting as it's going down? Nothing. That's why I only do dividend stocks, because I'm not looking for speculation. I want consistency, predictability, and safety. Okay? I'm not at the point. I bumped into a guy. I was putting gas in my van. Oh, this was a couple months ago. Guy's 84 years old. 84 years old. He looked sharp. He did. You know, hair looked nice. Had a tie. Had a jacket on with the emblem on it. Okay? He was just coming home from work. So I asked him. You know, typical conversation. Hey, how you doing? What's up? You just coming home from work? Great. Then I asked him, are you working because you want to? You know, get out of the house, enjoy, or are you going to work because you have to? He shakes his head, looks down, and you can see his whole body change. He was not happy. Okay, the stocks that you mentioned, Hakuna, no, I don't like them. And if they're good for you, great. But I have a hard time coming up with an answer for something that's totally against everything I stand for. Okay? So, I can't really give you an answer to that question. And it ultimately comes down to you. You have to decide, do you like those companies? Do you like the situation they're in? Do you like the position where they are? Do you like the premiums that they're giving you? You have to answer those questions. I like certain things. I like consistency. I like increased dividends, which I'm almost 100% sure that one of those companies does not have 20 years of increased dividends, which if it doesn't, it would never make my list. So back to you big riches. When SPY goes down, you're getting nothing. So yeah, it's not on my list. And I don't even bother looking at it because it's just a waste of my time. And I don't like wasting my time. Okay, so next on the list is CVS. I like CVS. Ooh, I don't like that. Alright, let's take a good gander at CVS. 61.76. 62 is going for 74. That's well over 1%. That works for me. Okay, I like 1% per week. Yes, I talked about EXAI and STM. Is it important to wait until the downward trend changes? You mentioned that it was still in a downward slope. Well, yeah, you have to wait for the downward slope to stop. And you have to wait for, okay, see here? She dropped, okay? Made a bottom, came up, pulled back, made a new bottom, okay, and then went up. There can only be one bottom, and as well as there can only be one top. So as soon as the company finds the bottom and turns around and starts going back up again, that's a great time to buy it. But you have to answer that question. Okay, the stock is down, it's on the way up. Do I like it where it is? Do I like the company? And you told me you like those companies. So that's a choice you gotta make. Okay, you're asking me my opinion. My opinion is no. Because it doesn't have increased dividends, it doesn't have weekly options, it doesn't fit in my parameters whatsoever. But you have to answer the question yourself, because after all, it is your money, it is your responsibility. That's why I tell everyone, it's your money, invest it the way you want to. If it makes sense to you, do it. If it don't make sense, don't do it. That's why I tell everyone, if you're here, does what I say make sense? Can I buy CVS? Now we all know who CVS is. Okay, there's a CVS in almost every major city in the United States. Okay? Can't you be a contrarian or a breakout trader? Is that bad? Hakuna? No, it's not bad at all. Okay, I'm 60 years old. I have no desire whatsoever to be contrarian. I have no desire to be a breakout trader. Really, seriously, don't. Safe, predictable, consistent. That's my That's my goal. That's my mantra. Okay, I want to be safe. I don't want to risk my money going down. And a company that's not paying dividends and not increasing their dividends, it's not even up for consideration. I don't care how pretty the chart looks. Okay? I don't. Honestly, I don't care. I'm not into capital appreciation. I'm into safe, predictable, consistent 1% per week. And if I change it once in a while, then it's just like, how do you believe what I say if I keep changing the rules? If I keep them the same, and I stick to my word, and I don't deviate, then yeah, well, people will say, hey, he sticks to his word. He does what he says. And that's what my plan is. My plan is to not stray from the goal. Okay? Now, you guys are just here, once in a while. You're just floating through my life. Okay, I am starting a new business, and this new business started about 10 years ago, and now I'm in a position where it's going to the next level. What's the next level? Well, the next level is my commitment to do this every single day for a year. Okay? Every single day for a year, I'm looking for a core group of people who want to trade on a consistent basis, because I have big plans coming up. Okay? This is just a stepping stone for me. Okay? And I'm teaching you safe, predictable, consistent 1% per week. It's a very simple strategy. Okay? Sage, nice to see you again. All right, so it's a simple strategy, and it makes 50% per year if you do it right. If that's not good enough for you, you're definitely in the wrong place. Okay, I have no desire to sit in front of my computer. Yes, I could sit in front of my computer and make a lot more money. You get to a certain point in life where money is no longer the motivating factor. My motivating factor is safe, predictable, consistent, and sharing my knowledge. Okay, my grandson's 4 years old. I'm building a corporation for him to inherit when he's 18 or 20. Do you manage investments for others? Henry, yes I do. But I have to know who you are. That means the only people I invest for are people that I've known for a while. Now I have a couple of clients that I'm still negotiating with, and I won't invest anyone's money unless I meet with you personally, have a nice conversation, and we get to know where each other are coming from. Okay, so I'm old school. First of all, Henry, you're new, so it means I wouldn't take any money from you. Okay, I would insist you actually. I want to learn option spreads from you. Okay, Hakoon, cool. You've been here for quite a while, so keep coming until you understand it. All right, it's a simple strategy. Back to you, Henry. Yeah, I'm old school. I look people in the eye and shake their hands. And to me, that's good enough. But I have to have a conversation with you, more than one. And you got to be around a little bit longer so you understand what it is that I'm doing and see if you're okay with it. Okay? But yeah, if you want to chat, Henry, DM me your phone number. I'll give you a buzz and we can chat more. But be leery. There are 22 other people pretending to be me. Okay? And I will never take money from someone who's not standing in front of me so I can look them in the eye and shake their hand. Never. Okay? I'm a man of my word, and that's the only thing I got going for me at this moment in my life. All right, so that being said, let's keep going with some of these questions. J.D. Roach. Are there risks if stock price goes up significantly than the stock price and you are assigned? The only risk there is, in my humble opinion, okay? Now, let's say, hypothetically, JD, hypothetically, you buy CVS tomorrow morning, 61.76, okay? And you sell someone the rights to buy it from you at 62, and you collect 74 cents. You got your 1%. Okay, you made your goal. Now, let's say by Friday, the stock jumps up to 85 bucks. What do you get? You get nothing. You get the premium which you sold, which was your goal, which was your target. Whoever bought that option from you, they get the capital appreciation. But it also works the other ways too. Okay, if you buy at this price and it goes down, you still collect this. You collect this right away. Okay, but you still own the stock if it goes below 62 on Friday. Okay, there's your risk. So that's why I always say, never buy something you don't want to hold. Okay? So, if you do not like CVS, if you do not know what they do, if you're not okay with holding them long term. Because that's originally what people do. They buy a stock and they hold them for years. Okay, that's the mentality you go into this strategy with. You go into it and saying, hey, I like CVS. I can see myself holding CVS for the next 5 to 10 years. Well, great. Then buy it. If that's the way you feel about it. If that's not the way you feel about it, don't do it. Okay? I look at every single stock I buy as if I'm going to buy it and hold on to it for a long term. But do I want it? No, I don't want to. I will, because I never buy something unless I want to hold it. But if I buy it tomorrow at this, I'm going to sell that, and I'd like to get this, and I'd like to get the heck on out. I'll see you again in 90 days. Why? Stocks pay every 90 days. CVS pays a dividend every 90 days, every quarter. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. Each quarter, every 90 days, CVS pays a dividend. I want to look at CVS every single quarter, just before the dividend. I want to see what the numbers are. I want to see what I'm making. And I want to see if the chart is telling me this is a good time to buy it. But is it a good time to buy it? No, it's not. Because look at the last 30 days. Here's the last 30 days. Okay? Now, could it continue going up? Yes, it could. But your 30-day high was Friday. Your 30-day bottom was last Wednesday. Could it continue going up? Yes, it could. But there can only be one 30-day high. Okay? There could be one 30-day low. Okay? It already surpassed the 30-day high. So would I do it? No. Me personally, no, I wouldn't. But that's me. Everyone's different. Next question. Sage, you like that? Okay. Dum, da-dum, dum. Bum, ba-dum, bum. What's your management fees typically? All right, Henry, like I said, you want to talk about that? DM me and we'll have to have a phone call. Would you butt options on CVS? Okay, Michael, I have no idea what would you butt options on CVS. Sage, smart move. You're supposed to be SI. What the heck is SI? Jake, you're supposed to be SI. BMY, Bristol Myers. We'll write that down. We won't get to it today. I like Bristol Myers Squibb. I do. It's on my list. But Jake Goldberg, you gotta ask that question in a manner which I'll understand, because I have no idea what that means. Sage, stick with your goal. Yeah. Okay. Here's another interesting thing. All right. Now, just to let you know. Okay. Does this mean that I have to fly over the pond to meet you? I'm in Scandinavia. Hukan? I don't know if I'm saying that. Hakuna Matata. I'm going to call you Hakuna Matata. Okay, Hakun. I'm going to say that's how you say it. You're in Scandinavia. Well, in that case, I would still insist on phone calls, Zoom calls for at least, I don't know, at least 90 days. Okay, I need to, because you've been here for quite a while and you do participate. That's great. That's awesome. Okay, you are concerned about your money, and that's wonderful. But you want me to invest your money? Yeah, I need to know more about you personally. Okay, it means constant conversations. Okay, now Doc Botox, he's here. He wants me to do his, and he's right in Florida, so I'm going to go down and meet him. We'll sit, we'll chat, and see if we can work out some kind of deal that we're both happy. Because I value my time more than I value money. But I'm also under the belief that people who pay attention. People who pay more attention. Pickled peanuts. Well, you're not. Well, okay. Yeah, we got 10 minutes left to go. So yeah, you are a little late. And Sage, yeah, I do stick to my. I like. You know what? I'm at that point in my life where my word is worth more than anything else. I value my time more than anything else. Because money, I can make money, I can lose money. Money comes and goes. But you know, it doesn't. Time. All right. Now, my grandson will never be poor ever again. Okay. Once he learned how to swim, He'll never have to learn it again. He'll always have that. I taught him how to snorkel. Okay? Certain things I'm doing with him that nobody else will be able to do, and he'll have it with him for the rest of his life. He'll get to that point and say, yep, my grandpapa told me that. Papa G, that's me. I'm Papa G. I think it's a cool ass name. But anyway, yeah, so my interest is more in time and quality time with family, because I'm at that point in my life where that means more to me than money does. Years ago, I used to be money hungry. Not anymore. Okay? I have a legacy that I want to pass on. I want to share with enough people that it can change their lives. And some of you people, I have changed your lives. I mean, it's like, I didn't know you could do that. Well, I didn't know I could do that either until I found out. And once I found out, I said, shit, more people should know this. That's why I'm here. More people should know this. Safe, predictable, consistent, 1% per week. That's over 50% per year. Okay? I'm not saying stop working and do this full time. No. Go to work, put your time in, serve your brothers, sisters, your community. Okay? We all need to, sweep the floors, vacuum the rugs, flip burgers, empty the trash. Certain things have to be done. Okay? I'm just a regular guy. I found this out and I said, holy shit, why doesn't more people know this? So I'm making it a personal quest of mine to share it with as many people as possible. And I'm going to do it for a whole year, and then after that, I'll reassess the situation. But until then, I'm going to be on every single night, 9 p.m., for a whole year. I've only missed 2 days so far. Alright, you're a good person. I like you. Oh, thank you, Hakuna. I'm going to take that as a compliment. Got it. You got it, Roach? Or, sorry, I'm late, Pickles. Alright. What was the profit on that? Alright, Michael, can you explain the profit on the 62 option? Sure. Okay. Now, Michael, I'm personally not going to do this because the chart doesn't look right. Even though the numbers look right, the chart doesn't look right. Okay? But let me explain to you the numbers again so you get that. If I buy it at 61.76, because that's the purchase price right here. If I was going to sell it, it would be this price. If I was going to buy it, it would be this price. And ooh, we didn't even see this. You guys see this? Okay, hold on. We didn't see this. The last trade, 61.78. That's the last trade for Friday. The bid, 61.50. The ask, 61.76. Both lower than the strike price. Do you know what that means? That means the market maker is going to push that price down on Monday. Usually that's what it means. When the bid and the ask are both lower than the strike price, the market maker has a tendency to push the stock down. When the bid and the ask are both higher than the last trade, the market maker is going to push it up. But here, look, you're going to push it down. Look at all this profit. That's going to be profit taken on Monday. That's my opinion. Okay, but here's where the profit comes in, Michael. Because the math, you got to understand the math. The math is very important. Okay, if I'm buying it at 61.76, I could sell the 62s, which is a little higher. Okay, I will collect a premium of 74 cents per share. Now, to find out exactly what that is, we take our calculator, we take our profit right there, 74 cents a share, 0.74, and we divide it by the purchase price, 61.76, divided by 61.76, and we come to a grand total of 1.19% for the week. But there's a few buts here. Look at the chart. Okay, the 30-day bottom's here, the 30-day high's here. Okay, what happens at a high? It's going to be profit taking because look, people bought it down here at 53. Now it's at 62. That's a $9 increase on a $50 stock. That's 20%, almost 20%. That's almost a 20% increase. A $50 stock goes up $9. All right, 10% is $5. Okay, 20% is $10, but it went up 9. So it's almost a 20% increase from the 30-day bottom to the 30-day top. Yeah, I'm pretty much thinking that there's going to be profit taking here. For those of you who like to buy options, perfect opportunity to buy a put option if that's what you believe. I don't do puts. Okay, I just say, all right, I'll take a look at this again in another 2 weeks, because hypothetically speaking, hey, 1, 2, 3, 4, 5, 6, 7, 8 more days to the downside, that's 2 weeks. So let's put CVS on the list for 2 weeks. CVS. Alright, so I got CVS. Take a look at CVS in 2 weeks. Alright, so hopefully, Michael, that explains the profit there. Uh-oh. Troy, I'll see you in the morning. Alrighty then, your residence. Why is the last 30 days so important? So the price is below the 30-day high, correct? Well, alright. This is my take on it. The reason why the 30 days is most important. Okay? Now, you and I, okay, we are the buyers, we are the sellers, we are the investors. We buy stocks, we create this mess right here. Okay? When it gets here, I'm thinking to myself, CVS at 53, that's a deal. Let me buy it. So if I'm buying it here at 53, which is the 30-day bottom, okay? Here's your 30-day top, your 30-day bottom, 53. We're the buyers and sellers. We decide whether or not we think it's too expensive or too cheap. At this moment, we think it's too cheap. Great, so I'm going to buy. So now we have a frenzy. Buy, buy, buy. And look at this big day here, another big day here, and it continues going up. Okay, great. But now, you know, up here, I'm almost up 20% from the purchase price. Okay, a $53 stock, 10% is $5.30. Okay, 10% of a $53 stock is $5. Okay, so for 53, $5, 58. Okay, 62 is a $9 increase. That is almost a 20% increase. So if I'm buying it here and it's up here, it's almost a 20% increase. Okay, so why is the 30-day important? Well, if I'm buying it on Monday, right? If I'm buying it on Monday and hopefully be out on Friday, that's only 5 days. Okay, so how else do you figure out where it's going to be in 5 days other than looking at where it's going? Okay, this is the year chart. The year chart basically going in a channel, right? See that? Bottom's here, top's here, a little bit too high, but that's your average movement. It's going sideways. I hate sideways because they go up, they go down, that's all they do. But she gapped down here, so eventually that gap will fill. Is it going to fill here? It might. But once you zoom in to the last 30 days, okay, I want to look at where it's going to be where is it most likely going to be in the next 5 days. That's my major concern. Okay, after I look at when they pay their dividend, okay, when do they pay the dividend on the calendar? I want to figure out, what am I buying it for? What am I selling it for? Am I getting my percentage? Great. Is it the right time to buy? No, not for me, it's not. I like it to buy it when it's bouncing off the bottom. I like to buy it low and carry the high. Okay, I hope that answers your question. Thanks. I missed that question. All right. Why is the 30 days so important? Yep, somebody asked that question already. So the price has to be below the 30 days. It doesn't have to be anything. Okay, you make up your mind what you want to do. Seriously. Okay, if this looks good to you, and you want to jump on the bandwagon, taking that up, hey, more power to you. I like odds and probabilities, okay? And I like to stack the odds and probabilities in my favor. Okay, first, odds and probability like my favor, 20 years of increased dividends, that's one. Second one, when is the dividend coming up? Is it coming up in the next 2 weeks? Great, that's 2. Third, if I'm buying it for this, am I getting my 1% here? That's 3. Then I want to look at the charts. Is it the right time to buy? Okay, because there's right time to buy and the wrong time to buy. My opinion is it's wrong to buy it at the high. It's wrong to buy it at the low. I like somewhere in between. Okay? And 1, 2, 3, 4, 5, 6, 7, 8 days to the upside. If you're buying it now, right, and hoping you get out by Friday, because that's the plan, to be out by Friday. Jump in on Monday, be out by Friday, collect that 1% and be happy. So you're up 9 days already. Friday's another 5 days. That's 14 days to the upside. When is the last time you ever saw any stock go 14 days to the upside without profit taking and pullback? Alright, isn't your enough that it is below the 60 or 90 day high, or even the 52 weeks? Yeah, but where's it going next week? That's my main concern. Okay, after I already figured out, okay, dividends, great. Purchase, 1%, great. Is it the right time to buy? Based on where do I think it's going next? Well, yeah, I think this is going to fill, but not with a 20% increase here. You get 20% increase here, yeah, there'll be profit taken, so turn around and she'll go back up again. More than likely. But how often have you seen 9 days to the upside without any profit taken? Because look at over here. Okay? That's a nice run up. Okay? It is. It's a nice run up. That's 1 week, 2 weeks, 3 weeks running up. But what are you missing? All right, she goes up, 2 days back. 5 days up, 1 day back. 5 days up, 1 day back. Big drop. Okay, so here's your high. If you don't take your profits, the market maker will take it away from you, which is exactly what happened here. Okay, here's your high right there. 1 day pullback. The very next day, market maker took all that profit away. It ain't a profit until you take it. And with that being said, look at here. Here's your bottom, 9 days to the top. That's almost 20%. You don't take your profit, the market maker is going to drop it on you. That's just the way it happens. But you have to decide what's right for you. I'm just showing you the trading strategy I created for my 9-year-old daughter back in 2008. Remember, it had to be simple, safe, predictable, consistent, and no way she could lose. So that 5 rules. Rule number 1, never buy something you don't want to own long term, because you just might have to. Number 2, never sell at a loss. It kind of defeats the purpose. Number 3, make sure there's 20 years of increased dividends. Number 4, make sure there are weekly options, because I like weekly cash flow. And number 5, make sure the numbers work. These numbers work, but these numbers don't. So it's a no for me. And if it was my 9-year-old daughter, it would be a no for her. But Daddy, look at it, looks so pretty. Yes. But you're now at the top. Here you go. You're now at the top of the ladder, waiting for someone to bring you a taller ladder. Okay? There's 22 trading days in a month. So your chances are 1 in 22 that it's going to go up. Because it's already made the high of the month. It's at the high of the 30-day period. The only way for it to make another high of the 30-day period is to go up yet again. But the market maker tipped his hat. Last trade, 61.78. The bid, 61.50. The ask, 61.76. Both are lower, which means more often than not, the market maker is going to push it down tomorrow. If you don't take your profit, the market maker will take it away from you. I've seen it happen way too many times. That's why I looked at safe, secure, predictable, 1% per week. It's 50% a year. And you know what? I'm perfectly happy with 50% per year. Okay, Hakuna. So you only look at 30 days for selling call. Nope, that's not what I said. If not, would you look at a longer time span otherwise, like 52 weeks? Oh, hell no. Okay, I want to see what the stock is going to do in the next 5 days. Okay, if I'm getting in on Monday I'm getting in with the intention of being out by Friday. That's my intention. I want to be in on Monday. I want to be out on Friday. The only way I'm going to be, oh wow, I'm way past 11:30. The only way I'm going to be able to do that is to get in on Monday and to make sure the stock's going to be out by Friday. 9 days to the upside, I don't see another 5 days. That's me personally. Okay, people are weird. Okay, 20% profit. Oh hell yeah, I want to take my profit. If you don't take your profit, it's not a profit until you take it. Nobody ever went drunk taking. Nobody ever went broke taking profits. Okay, it's up here. More than we'll take a look at it tomorrow. Somebody remind me, CVS tomorrow. Okay, but yeah, I want to take a look at CVS in another 2 weeks because I like CVS. They pay nice premiums. All right. All that being said, we're past 11:30. You guys have a great night. And for those of you on our morning trading group, I already sent out the link for the Zoom call tomorrow morning. I already sent out the stock list for the stocks we're going to be looking at tomorrow morning. Okay. For those of you who want to join, you know where it is. Dividend Stock Talk. The 10minutetrader.com. You come down here, it says live trading, or you can go directly to Patreon. Okay, Dividend Stock Talk at Patreon. Okay, you guys have a great night, and we'll see you again tomorrow. All right, and over here on Facebook, done, and over here, done, and over here, done. Okay, so down here, Dividend Stock Talk by James. Okay, so 11:40, 6/9/24. So the 9th of June 2024. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. You guys have a great day, and we will see you again tomorrow. Have a great night.